Guys, I hope you hear me. Guys, can you hear me? I just, I did not mean to waste you guys' time. I was here talking the whole time, thinking I was streaming, and I was wondering why nothing's coming in the chat. And I hope you guys even hear me now. It's just start. I'm just waiting for someone to respond to chat. Hear you? Okay, good. I apologize for that. I just realized. So I'm glad you guys didn't leave yet. All right, well, I guess we're gonna start now then. Yeah, I did pull a Derek. Yeah, I did. Yeah, so I need to remember that go live button. All right, so here we go. This is the S&P 500 ETF. I know there's gonna be a lot of questions and whatnot, but I'm gonna go really slow and explain this like a 5-year-old, and I think that's really gonna help because if you see the market like that, you will be fine. You see how it's that simple. You see how this S&P 500 from December all through. It's been pretty much a bull market for so long. That's they've been talking about. So it's just like getting the timing just ever so right, which is not hard to do if you see how it's just been trending at this steady pace, and then you're just selling credit on the options as it's going. It's just like a common strategy, but it does work and it generates income. So that's the main thing I plan to do during this challenge. If you want to call it a challenge, it's just, taking the money that the cabal gave back to us, and I want to grow it a bit and use it as an educational tool. So I would say the best thing, of course, is like paper trade and everything. But of course, it's your money. You do what you want, especially if it's from the cabal and you have nothing else better to do with it. But I'm going to show you how to play these different things the market's doing. And you can see right here, this has been a really good example. You see how since April 9th, the market was here at like 279. Now today, it's at, 285, but it's still in this range right here, you see? So you can make money off the fact that the market's just sitting here in this range. And you can tell that it's in this range. The technical analysis really helps. Hey, Z Sandy, glad you're here. Indian Roca Lion, what's up, Dan? Yeah, so I'm really showing how my Robinhood account, I'm trying to grow it with the money that the cabal gave. And at the end of the day, it's just a nice educational tool. I'm taking it very methodical, so I'm not going any sort of YOLO bets. If anyone wants to do that, go ahead. I'm just here to give my opinion and share my plan. And you can kind of see now with this credit spread I have on Pfizer. And this is the best way how you can find what stock. Everyone's trying to find the hottest stock, the coolest thing. You just got to use a scanner. Once you use a scanner, you know all what to do. Yeah, Cal said he wants sports to come back so he can make money again. So, and that's also why I'm doing this. Maybe what if sports don't come back? Oh, Jerry Bailey timed out. What happened? No. Must have been an accident. I know on my phone I've almost done that many times. So for YouTube purposely has that. Well, hopefully you can still I think her phone's messing up. That's what it seems like. We'll look at this spread I have on, and I'll explain my whole point. Hebzuzi, I'm glad you're here. So, what I did was I sold this option and bought this one, and the total width of this is 50 cents, which means, that's like the max you're kind of trying to make or lose. So, with a very small account, you're aiming for like half of this, because then it's like a 1-to-1 risk reward. You got to be right only half the time to break even. And sometimes you can get these at like much better deal. Like you can spend $10 to make 40, or spend 20 to make 30. And if you're doing stuff like that, like you're spending $10 to make 40, you barely have to be right, But if you do it long enough, you'll still be profitable. What's up, Dr. Savage? Glad you're here. So, I'm gonna show you the chart and how I found this stock and what the whole point of finding stocks is. So here you go to the groups and you can see what sectors have all the money going in. And the whole point is the people who run the show, they have all the money, they have all the stuff, right? The people who run the show have all the money, the utilities, the people that they can send out to research these things. And these people spend all their time, all their energy figuring out like what's the next best thing, where to put their money. Because if they don't, they lose their job. Like, this is not even like a theory or anything. It's like, if you don't figure out where to put the capital's money, the firm's money, these are funds, all these people's money they're investing, then you don't know, you're not going to make anything. So you're pretty much following all these very big people moving money around the market. And then the S&P 500 pretty much tracks where that, how that money's moving. You know what I mean? So when the market's going up, you want to be having some bullish trades going on in sectors that have all the money going in. You can see financial sectors. Well, but you have to be careful. It's the one-day performance. I like to look at like what they've been doing for at least the past month, and then maybe the past 3 months, kind of. I see the overall picture, because the one day could just be a pullback, and you can see on the chart. You can look at the ETF of the financial sector. You can see how it's been downtrending. It looks like it's recovering, but it's just like the push up. It looks like it's breaking out of this still, but it could easily get, the banks like they do, they could just easily plop this back down. It's still not in a, very strong uptrend. It's just channeling up. So, you gotta be careful with just looking at, being narrow-minded or narrow-sighted. Hey, Judy. Yeah, Cal, and that's my purpose. Like, over the series of streams and people asking questions, I hope to at least empower people to look in this further. Because what if sports are down for next year, 2 or 3, or maybe not even that long? At least gives you like something to do. And with options, you can structure them like bets, and that's the cool thing. Like, you can do a targeted butterfly, and I'll even show you that real quick with certain things. Like, if you think the financial sector is really going up, and it's possible. I mean, this could be the bottom of the financial sector. This could be where it recovers and it continues. I mean, that's literally, it could happen. Anything can happen in the market. So since anything can happen, if you've gathered evidence based on where the sectors are, and financial's been doing good today. It's been doing decent for the past week, but see, the past month been pretty bad. Past 3 months pretty bad, as we see on the chart as well. But if you're doing more short term, if it keeps trending up week after week, especially, then you want to just be a little bit bullish on there, possibly. And it's very possible that it's eventually going to want to come and tap this 180 SMA, as you've seen it done in the past. It's reversion to the mean. And these things you can always look up and research. Mean reversion, these are all concepts. There's things going back to the average, deviating from the mean but coming back. So they always comes and taps this over the years. And here's what I love to see. I like to go back and just ask yourself, right? If back in 2000, back in 99, this same type of stuff was happening, right? The same type of stuff happening back in 99, back in 2001, 2003. See? So what makes you think that it's not going to happen now? It might not happen for months. It might even happen for a year, right? But eventually this thing will come down. These will all catch up, and these things all even out. Because all these moving averages are based on the price action. That's why I like to look at the volume, see all this more increased volume here than the selling. It's showing signs that more money is kind of moving to the sector. But it's just for how much longer. So that being said, you could put out you could have a bet saying, I bet that this is going to tap maybe this area like a few months from now. And you use that by making an option spread. You can target maybe this zone. You can say, I would buy a $25 call, sell, at 27, and then buy a 29, or you sell two 27s, buy a 29, and I'll show you how that will work. So you'd say, maybe let's say you think this is going to happen. Let's pick September 18th with 144 days later, time 144. And hey, if this is your strategy and you can just backtest this, if you say, hey, I'm just feeling lucky, 144 days later, I'm liking this. You could. It should be pretty cheap to put on because of how this is. And we're gonna get back more into the basics. This is just I'm showing you what you can do, so then when we start from the beginning, you kind of know what we're getting into. So this is gonna kind of go low over time, but let's just for simplicity's sake, let's just do the what was it to 25 to 27, 29. So kind of this area, you can even make a little wider. Let's see how much that costs right now. So here's this might look confusing, but again, you can break these down and research them. Because if I really try to teach every last thing on this, it would just take so long. But I'm showing you kind of what's out there, so you can go and look it up more further. But I'll try to explain it the best I can, so you can get started. So you pick the date you want these coupons, because you're just trading, coupons, saying like all call option is saying by September 18th, I'm spending 59 cents for the right to buy 100 shares of XLF at $27. And we can see that a little better in more examples. But what we're trying to do is just make a bet that is going to be at $27 144 days from now. And again, this is not based on really anything. It's just in case you thought that. So here's your target is 27. You'd sell 2 of these. So you're selling these. They're gonna give you 35 cents per share. So you can get $35 per contract. So you sell 2 of them, and then you buy a 29, and then you buy a 25. So they're each 2 strikes below. And then you can even look on this graph, and it shows you how much money you can make and how much you're spending over time. So this bet is you're betting $26 to make up to like $130, $140. That's a really good risk reward. Can it hit? It very well could. But the thing is, even by then, I mean, you have to be really lucky, because by then it can get to 30. If it goes to 30, you lose. If it's like 23, 24, I mean, but you can make this range wider by widening, your strike prices, and you might make a little less money. It might cost a little more, but it's still like, it's all about probabilities, and it shows you a percentage. And here's saying 0% stuff. I mean, there's like, but still, I mean, they can work. So that's just an example of how you can craft your own bets that are far out. But if you want more shorter term things, that's kind of what I'm showing with just credit spreads. And this is not a good thing to look on. Let's look at, you can look at the technology sector. This is doing pretty good. It looks like it's steady. Look at even the steady channeling up. It looks like it's a flat out here and maybe even recover. Because with all this coronavirus stuff going on, technology is not really going to suffer as much. Yeah, Nikki, it's YouTube's fucking everything over. They love doing this. It's ridiculous. Yeah, Jared, I'm sorry about YouTube fucking with this shit. It's crazy. But I'm glad you guys are back. Yeah, so strange. Well, I'm glad we all witnessed it. I'm glad we all witnessed the bullshit that they're pulling. Yeah, we can see Jared now. He's back. So let's break this down in Robinhood. I think that's the. So what did I just buy for $26? So I didn't buy it yet. I didn't place the order, but I crafted my own. You're pretty much making your own trade, your own bet. What I bought was the bet, if that's how you can look at it, that the financial sector would be at $27 144 days from now. Like if you really think that, you can spend $26 on that bet, and if that came true, you'd make like $140. Because you'd make the width of the strikes. There was like $2 strikes minus how much we paid. And I think it costs $26. So it's more than that. It's like, you can just do the math. But it's pretty much that's like how much that's how much you'd make. And this risk graph shows you for you, but you can do it all in your head on a piece of paper, too. You just it's the price of the options, and we'll go all that in depth now. I'm kind of want to start from the beginning now, but here that's how I found Pfizer by looking at this. I saw healthcare was going up. See, the past month healthcare's been going up. So if something's been going up for the past month, you just have to assume it's gonna keep going. Things keep going the direction they go until they just don't anymore. And you can never feel that you're arrogant enough to know the absolute top or bottom of something. Sure, based on like certain things you can, like for example, like on one trade I put on today, I forgot the name of the ticker. I don't think it's on here. But I mean, even something like THMO, I mean, it's a shit penny stock. I mean, like you can kind of call a top here, and a lot of people shorted here too. I mean, they got squeezed later on. They got squeezed hella hard later on when these people came with news. But like, you see what I'm saying? Like, there's indicators that can kind of show you, but even then, it still went higher. These things, and this thing can still go higher. Thermogenesis Holdings, this is all, it's all coronavirus related stuff. So, so you just want to look at where the money's going and just follow it until the money just stops going there. So I saw the healthcare sector is going up, and then you just this is where it gets fun. You look at the screener, and I'll show you because there's a free version of this that's all the same, but I just want to show you on that one just so we can all be on the same page. Wait. So all you gotta do is go to the screener. The groups that shows you where all the money's going in. And you can go short too. If you want to short the market, short things, you see the sectors that are the weakest, basic materials, the past 3 months. But you gotta be careful. It depends on how your time frame. It depends on your personality. Like not everyone here is gonna trade like me or do this like me. Some of you might like actual longer term stuff. Some of you are thinking, I want to buy the bottoms of all these things. Like Tupperware. That's one thing I was actually looking at. Tupperware. It's just because it's Tupperware, you know what I mean? It's just like a common thing. I feel like they can still just like they have some pretty good sales around the world. So like I was looking at some, and it looks like it's starting to curl up off its lows just now. I want to see it break above this 50 EMA, or excuse me, 50 SMA, and this starts curling above and it starts trending up. Then I'll be okay. This looks like it wants to at least reach here, and then I'll go add on this gap fill up. Like I already have a plan for this. I don't care how long it takes, but you know what I mean? Like you can think very long term, and you can use options to do it. You can just buy stock. I mean, you can buy 100 shares of this for like $200 right now and hold it for as long as you want. And that might be even better because with options they expire. I mean, shares are not going to expire. Yeah, tech stocks will most likely rise, and this stuff is based on this stuff is based on big companies buying back their stocks through Fed programs and indirect Fed buying. Yep, a lot of it is, and that's things follow these big buyers for these things. And the tech companies are definitely doing good. And as you look at XLK, that's what we're looking at just now, and you can kind of see what it's doing now. It's going sideways here because pretty much whenever like a stock kind of reaches a moving average, look what it is. It's by these 3 moving averages. So you have all these traders, all these signals. You know what I mean? When you see this is where things go sideways. So like it's not so you can with stock you can't really make much money off this. Like if with a stock I'd probably honestly go short. I'd short this double top here because your risk. But then the thing could gap up the next day easily on some bullshit. You know what I mean? So it's like, why even? With an option spread, you just target this. Like what I showed you earlier, remember where I sold those 2 options, bought those 2 around it? You do that here, and if this expires, even just by here, I mean, so all the index ETFs, they're all monthly, but it doesn't matter. You can still take it off early if that's your strategy. I like the whole thing's expiration because you don't have to worry about them. Yep, delivery services should be doing good too. And see, it's interesting Jared's saying these things. He's saying these things, and you look at where the money is. See, the past month, look where a lot of money is going. Services as well. So you can see where the money is going, plus your intuition like that. Then you understand, and then you're like, okay, well, then what stocks to pick? Then you go to the screener. You click services sector, you go to performance the past month or the past week, wherever you want, and you just go from the see. These are the companies that did well the past month. But you got to be careful with some of these. Tops is the biggest pump and dump penny stock ever out there, and they're number one. So don't just say, "Oh, this is number one Tops," and then you buy Tops because it's cheap. It's unfortunate because some people will do this. They'll say, "Oh, it's the best services right now." It went up 231%. I mean, granted, if you bought Tops at this price, it's possible it can get pumped again, and you can actually make something. But it can also get diluted again. Another short squeeze, or not short squeeze, another reverse split, and another dilution, and you'll lose more money. I've lost money on this before doing that same thing, so I would not fuck with that unless you know what you're doing. But like you can sort by price range. You can say anything over like $20 because you know that maybe institutions and people that with money are actually talking about it. And then you see what like Wayfair. We all know Wayfair. See how Wayfair is going up. So the Wayfair is a hot stock now. It's not my stock pick or stock tip. It's where the money is. Sure, is it overextended? Yes, but it can keep going. This thing can easily tap 140. You don't know. Sure, it's your risk tolerance. You can always, smaller share size. You can do do whatever your strategy wants. It's hard to really say what to do. It depends on your strategy, your personality, what you want. 33 watching. And then we can even look at Wayfair's gematria. And then, because I said I want to do some gematria on these things too. Wayfair, we've seen them from propaganda too. Wayfair 3883, 10643, and you see how they're overextended. You want to look at some date numerology? You can actually do this because you can do this. You can backtest it. You want to backtest all this stuff I'm showing you anyway. And when you see that it's statistically in your favor for how much you're putting down or whatever, and it's positive expectancy with your strategy, then you can do it. So, see, you would think April 30th would have a life path number of 38, but it doesn't because that's 0. You know what I mean? Oh, it is. It does have 38. So, you know what I'm saying? Wayfair 38. You can look out for what they do on Thursday. And what makes, and I've shown you this with Tesla. When Tesla stock is overextended, and then when their numbers hit, that's when you see the sell off. And then when it's at support, you'll see like a pump or something there. And, I mean, Tesla's so good with that. So maybe Wayfair on Thursday, we'll see what they do. But then Wayfair could release some good ass news. So Wayfair has this thing going on for coronavirus, and then all of a sudden, like, their stock goes to like 160. And you could have bought long calls like you should have, because it's not you should now, but you know what I mean? Like, for the fact that it's going up and up and up, you should be bullish on it because you shouldn't be trying to short this unless you see like some obvious signs, like a double top or whatever. Yeah, cracking the code. Yeah. Today is normally the 117th day of the year. It's interesting, yep. And then you can even look at that. That's how you can do more research. This Finviz screener shows you the top stocks of the day. So you can even see, okay, did any of these have the numbers for today? I know, again, you'll learn that some run a bunch. YTN, Y10, this thing runs all the time. So I wouldn't use gematria in this personally. This thing ran like a couple days ago. With the 4464. I don't know what half these companies are. It's a bioscience company, so it's probably some coronavirus stuff. But these things are better to look at the higher price things. You know what I mean? Like, and it's hard with these biotechs. For example, like Pfizer, you can expect them to participate in things by the numbers. They're exactly run by the gang. You know that they're a big conglomerate company. You know what I mean? So, Jared, happy birthday to him. Your son's 10th birthday. Sure, there's a lot of running around. Yep, ESP power 117, May 1st equals 666. What will happen? Probably something with the market. And that's the thing you can do. You look at the S&P 500. This is what the overall market is doing. You can look at the index as well, but May 1st is right over here, right? So I'll put a marker here. You can put a time marker here. So see this line? This is where May 1st is. So this thing could keep going up. This thing could break. It looks like it already wants to break out of this. Break out from this channel a bit. Or even sell off here. I don't know. It's hard to say, but this is the date you're looking out for. those pot stocks today. I didn't see any of them move, but they probably did. I know a lot of them are in OTC land. I don't look at OTC too often. They probably did well. But, this thing looks like it's just kind of, the SPY right now, the market's just kind of staying still right now. So that's just interesting. We're talking about May 1st equaling 666. We can look into May 1st some more. May 1st, 2020. Whoops. That's a date with 46 numerology. Virus 46, Virus 26, Chaos 46, Dollar 26, Bank 26. The market likes to do a lot of things in this date as well. And it's on a Friday. They did, have these types of things. Conspiracy 51, Space 26 with the 51 connection. You'll see that too. Tesla could have a good day that day. Tesla's already been, still doing good. So we can see this range, and then on Fridays where it just makes its move. Trying to think of what everyone is gonna want to do when stuff opens back up. Maybe eating out. Yeah, eating out is probably one of those things. Depending, I mean, I've heard some people say that they don't want to do that, but that's just one person I heard. Going to the movies for sure. I know people are going to do that, which is, but it's done. If the sheep are going to go out and do one thing, they should do everything. You know what I mean? If you're going to go out to do one thing, I mean, it makes sense. There's probably some exceptions. You might not want to go swimming or something more bodily. Again, I'm just trying to think like someone who's indoctrinated as fuck, who's falling for all this crap. If they shut off the internet, there'll be no trade. I don't know how you can trade unless you go to the floor without internet. Do I think the market is propped by Fed? St. Louis Fed calling for 32% employment is depression. Do you think that test of lows coming and when? So, about the lows, I think this was right here was a test, test, but it's not a retest. So, what do I think they're gonna retest the lows? I think that the market is gonna. So right now, this is a bull trap. That's what it looks like to me, and because you see us coming over the 50 moving average, it's giving people confidence, right? So these are going to converge, start to show people confidence. So people are going to start buying in. That's when they're going to pull the plug, possibly on May 1st, and send it back down. And when it goes back down, it's not going to just like come back here and then bounce up again. It's going to go even lower. And you go back to 2009 and see this. One of the traders who I work with, he's showing me a lot of this stuff. And here's 2009. So you see how the market would sell off, just like go over just for a bit. And even here, they give you some confidence for a few months, but then it went even lower. See, I want to zoom out a bit without going out too much. So these indicators, these moving averages a lot of like institutions and like, bigger traders use. But you see how they got faked out here. They got faked out here. They got faked out here. And this is what see this right here. This is what I'm thinking we're gonna see in a way. If I'm from my bearish perspective, because we're approaching the 180 again, the SMA. So the 200 SMA is what the main benchmark use. I just like to use 180, but it's around the similar area. So it's like a test of the 200, and then back down lower, trapping them on the 50 SMA, selling off again, until then it finally like recovers. So You see what I'm saying? But what I also see then is this happening again much later, maybe during phase two, and they really do punk people. They really bring this back up, and it actually starts to recover, like, and just gets back to normal. Just it's like this back here. It's just a bigger one of this. That's my other theory. That's my bullish perspective. That it's just a bigger one of this. It's just gonna start recovering from here. And my bearish is that it's gonna start rolling over any day now. Robinhood charges for day trading, right? No, they don't charge at all for anything. Well, they technically do in a sense where, you can't. Your fills aren't always the best. You pay for just using their shitty platform. You pay for the inconveniences. You pay for, whatever else they fuck you. But it's still good, especially for options. I'm a day trader mainly. I do not hold stocks at all for a long period of time. I absolutely hate holding stocks for this very reason, because I'm the type of person to hold a stock through this shit, and I don't have the patience. I want to make money off this, you know what I mean? So with options, I would hold a butterfly spread through something like this. So my long-term stuff is all with options now. I don't. If I ever held a stock, it would be a low-priced penny stock, or a small cap stock that I'm in that I'm already up on, and it's just it's a multi-day runner, something like THM. I'm not holding this, but this is the type of stock I would hold. I have no problem holding something like this easily. Buy off this dip. I mean, these are some nice dips too. Look at this first green day. I mean, these are just beautiful patterns. This is why I love, like I like. I'm showing options because we all can participate. It's easy to trade the overall market with and everything, but I just love small cap stocks. They have their simplest patterns. It's the simplest shit. It's just like sell off, sell off, sell off. First green day, that gets people here. So the second green day is, it just this day is just gonna be good. And it opened at like $2 and it hit high at $2.50. So you could have even captured 20 cents that day off just like some sort of pop. And now look, THMO. It's at hit high at $10 yesterday. So that's something I would like to buy and hold. Most movies are shit. Yeah, we ain't missing out at all. Yeah, they charge to transfer your assets out of. Yep. And that's the thing. They trap you in with their shitty services. And then they're like, oh, you want to leave? Well, you got to pay us. Yeah, it's bullshit. But if you're just trading, then it's awesome. And I'll show you more of this platform. So here's one of the trades I put on. I don't know if I showed this already because I streamed and I forgot to click play. But for anyone who just joined, I sold. So I showed you how I found Pfizer. You saw how I found that stock based on the scanners, seeing what the big money's going. And you can just even look at the chart too. But looking at just knowing what sectors are hot, looking at you don't even need the scanner. You can just look at the ETF. I mean, of all the sectors, this is the healthcare sector. It's looking really, really good. This is where it was before coronavirus. This is coronavirus nonsense, and look where it is now. And that's I mean, come on, this is so strong. Sure, is it? I mean, it looks like it should pull back here, for it. I don't think it's gonna go straight back up. That's the only thing. Just because this gap right here is gonna have to shake out some of this before it wants to go back up. So it might be grinding back up. But anyway, this is really good. So like, I'm really excited about this sector. That's why I just did something very simple. Pfizer is one of the good performers. They make all the poisons. Poison all the sheep with their nonsense. We all know Pfizer, the drug company. And the thing is, I'm trading the coupons. The tickets that let you buy and sell shares of their stock. I'm not investing at all in this company whatsoever. So what I did then is around here, let's break up the SMA. This sector is really strong. We see how this acts around here. It is eventually going to break up and go over. So even if this ends up faking out and rolling over, my trade is short term. I think it expires May 15th. I mean, this could easily roll over by then. But even if it does, I can squeeze some credit out of it and sell and get rid of it early for some profit. So You see how it's like the 37 area? With a small account, I had to go out the money, which means that you're buying and selling options that are out the money. Like they just have extrinsic value, time value. But there's some good money in there, especially with all the intrinsic value going on in these options with all this crap coronavirus stuff. So the 38.50 is right here. I'll put my price markers on. $38.50 is right here. So I sold this put option. It was in the money when I sold it, and it technically still is in the money because it closed at 38.33. So in the money means that a put option of 38.50 means that it's a ticket or contract saying that if you hold that put option, you have the right to sell 100 shares of Pfizer at $38.50. So I sold somebody that right. So what I'm hoping to do is by May 15th, this will grind higher and be holding above that level. So once it's higher, that means that the option's worthless, because why would you want to sell Pfizer at that price, $38.50, if the price is at like $39? You could just sell it there. You could just short it from your broker. So the option's worthless. So I sold someone, very well one of these you-know-who's, a worthless option, and I collected money off that because I sold them. I already have the money. It's just, they take collateral and everything. So you sell, you don't collect the full money once until the expiration date. So once it's up here and it's expired, I get the money, and the option I bought is to protect myself, because what can happen is I can sell this guy's put option, right? And then the price is tanks, and then I owe him all that money because I have to cough up. You know what I mean? I have to cough up however the difference of it is. If the stock goes to $30, and he says, "Well, I want my shares at 38, so I owe him like $800." So that $38 put option I bought, no matter what happens, I can't lose more than that spread, minus the debit or the credit received from the spread. So it's like $25 out of $1,200. So it's like 2% of my account. So I'm risking 2% to make 2%. So it's hard to blow up. Looked up toilet paper brands and found interesting numbers. And he reminded me, we could look at Procter & Gamble. They're another stock that's, part of this. And this is the estimated breakout fake out that they did. And this was from their earnings too. I was thinking their earnings was gonna make their shit go up here. It didn't. It just double tapped this. See that overhead I'm telling you about? It's just very, very hard for a stock to like break above these types of like overhead. You know what I mean? That's why they make these symmetrical patterns. Because there's a lot of people up here who are just trying to sell and get out at not much of a loss. But see how it's trying to hold here? I really think Procter & Gamble, if the market, especially if the market doesn't collapse again, wants to, consolidate here. And this is actually a really good time to put on I'm probably going to put on this trade. I might do it in Robinhood. I can even show you now. This is perfect. We're going to put on the trade right now because this is a really good setup that I think I want to put on. It just might be too expensive to put on my Robinhood account. But if not, I'll put it in my other one. But we'll at least build it out. You trade using the harmonic pattern, Discerning King says. But this whole shit is controlled. Yeah, but it is so controlled. And that's the thing is, it's so controlled. It's all AI manipulated by this gang. But, so many systems and strategies work. It's all about a casino. It's like, how does the casino make money? They have the edge. They have a statistical probability that's in their favor. And it doesn't have to be over 50% of the time because, again, if your risk-reward ratio is 2-to-1, you have to be right 33% of the time to break even. So you can be wrong more than you're right and not lose money. That's the thing. It's just all about. That's why people lose money in trading. They just manage the risk poorly, and they use a strategy. Either they manage risk poorly, they use a strategy that doesn't work, or they're undercapitalized. So because you can have a really good strategy, but you can get your losses at the beginning of that, your string of losses, and if you have not enough capital, you can get wiped out just pretty much out of bad luck. Those, and then they get emotional, and people get emotional, and they all this other crap. Those are the only reasons people suck. Other than that, if you stick to your strategy, you'll be good. So, if you guys don't want to use Robinhood, there's definitely other things. I'm just using this because it's completely free. It's easy to teach with. But this Procter and Gamble, why I like this is because it broke above, so it tested this SMA, failed. Tested again, it failed. It keeps trying to test it. Another false breakout from it. I think this thing wants to try one more time though. I could just see it's catching this, and it might not, right? But it's going to take some time for the people to figure that out. So it's going to be caught between these moving averages, maybe for about a week or two. Maybe not. It might not, right? But who cares? No one knows. It's all about what's your risk, what's your reward, what's your downside, and just put the trade on. Because if you do it enough, you're going to just be profitable over time. So I want to stay in this area, so it'll be like maybe a. Yeah, I won't have enough money to do this in my Robinhood account. I can already tell, but if you want to be safe, maybe like I don't even know, 115. Let's see what options are there. That's probably what we should do first. Actually see what's there. Like, if you want to be really safe, you can do one 4 days out. But even with these butterflies, you want like time on your side because you're selling the time, the decay, and it's always called theta. You want that to be on your side. That's where you're selling these options. You want them to pretty much land on them, and you make a lot of money that way. And it's not about making a lot of money. It's just like you're better off doing this 11-day out and taking off early even than this 4-day out, I think. Maybe even going out longer. But 11 days, I think for the next 11 days, and this counts the weekends too. So you get that's the thing, you get free days too. When it's the weekend just sitting there, that's just, you're making money over the weekend based on this shit. It's awesome. So what's like the middle of this? You think maybe your middle of this is about like 118, 119? I'd say, because this is some overhead. This 119 area, it'll get stuck here. So maybe even 118. What's this SMA at? 120, 121. So 118, 121, 115. That's actually perfect. Butterfly. I'm probably going to put this on in some account. But this is what, we'll build this out in Robinhood. Because this is what you would do. You go to Procter & Gamble. But we'll do it over there so we can see the graph. You can see what it looks like too. So it's Procter & Gamble stock. You can trade their options. And here's, their calls and puts. You select your expiration dates. What was it? The 11-day out. I think that was the May 8th, 11-day out. Yes, May 8th, 58, 85. And again, you get corporate gematria, of course. It's just, it depends on how much weight you want to put it on. Very well nothing could happen this day, but today with 33 numerology, Procter & Gamble. Because, again, we're putting out a trade where we want this to stay in its way. And this is, I've said this before in a video, this is where gematria can actually help you because maybe, for example, Tesla, they love doing things on number 44. But you see how Tesla is in a range. What if you see how Tesla's ranging? Pretend this is Tesla. What if maybe on May 7th, Scottish Rite 57, let's just pretend that was a day with 44 numerology. And it's like 144 days from Elon Musk's birthday. And, they've been talking about it, and they've been kind of trending, right? Maybe you might not want to put on a butterfly neutral or any sort of neutral trade just because you know that that's a day that's very ripe for them to have some sort of bullshit fake news propaganda play that will ruin your trade because it'll send the price up here or down here and you lose everything. Everything you put into the trade. But if you position for max loss, that's the whole point. It should not matter. No one trade should matter. That's why I put $25 on. Okay, I have a trade I did put $50 on. Want to put like 40, but that's like, again, sometimes I do YOLO a couple trades, but for the vast majority of my trades, they're $20, $25, 30, 34, 2-3% of my account at most. even some 1% if I'm not too good about it, but you're risking small, so that's why it shouldn't matter. So we want to do the 118, 121, 115. They're all 3 strikes in width, or so it's an equidistant width, and you want to land in the middle. You're not gonna land in the middle. You rarely are, but you're gonna still be in that area. And if you're not paying that much for it, then you have a lot of room, a lot of wiggle room. So selling the 118s, you're gonna sell these. You can use calls or puts, and sometimes it may be cheaper or expensive using one or the other. Also, depending on the direction you think it might go. I mean, it's kind of more personal preference at some points. But let's just use calls. So we're selling the 118. We're gonna sell 2 of these later on. 7, 16, 15. Buy the 115, and then buy the 121. So it's gonna cost us $278 to put this on. No, it's not, because I gotta sell one more 115 call. So it's gonna cost us like $100-something bucks. You gotta edit the ratios. See, Robinhood, I don't know why they can't just make the butterfly easy to put on without doing this nonsense. What? Did I do this right? Oh, that's a buy. That didn't look right. I'll just redo it. Sorry, I didn't mean to trip you up there. So I knew that looked wrong because we're selling these 118s. Although, let me see. I kind of like the puts better right now. So we'll use puts. And then we're gonna buy the 121s. And that number 121. Revelation number. And then we're gonna sell 2 of these. There, so it's cost us $152 to put on. And we're gonna make probably, honestly, that amount, maybe 150, which honestly I don't like. Where butterflies, I like to get at least 2 to 1, 3, 4 to 1's nice. But again, it's a trade that it's at high probability. So like for high probability trade, it's not so bad, especially if it just doesn't work out well before expiration. You're not gonna lose the full. Actually, you might. Actually, you probably still will. If it goes out of this range, you probably will. But with a larger account, that's not that much of a percentage of that. So, and I'll show you that what it would look like, because visualizing it really does help, especially for those who are new. And then here you can even change it real quick. I'll show you. All right. I have 2 of these. So this one says it's gonna cost us $100, like I thought. So yeah, to make 200. So yeah, I just did the math wrong. Well, it's because over there it cost us more on Robinhood. But you can set your own price and let it sit there and get filled at the price you want. If you don't get filled, then it's whatever, go into the next trade. So I'm gonna risk $100 to make 200 if this hits 118 by the 9th. It's very reasonable. That's what, 8, 9. I think this is a consumer goods sector too, which isn't doing too good. But this looks like P&G might just hold up. But the sector's not doing so good where this is gonna take off. Also the 9th, or it's the 8th then. It said the 9th because options they expire that day, right? But then the thing actually happens the next day. Like the expiration's technically the next day or whatever. That's when they get processed and all that. So for this I think this is gonna stay around at 118 by the 8th. So it's gonna bounce off here. People are gonna buy this dip, consolidate here, meet this overhead, sell back off, and try to fight their way back up here. And if it gets up here, this 120 area, I don't lose. I might make even a little bit, like $10 or something. So I can make 100 or 200, maybe 50, 10. So you have all this room to make money. You're spending $100. It's not like a sports bet. The sports bet for here will be if the stock goes up way above my range, then you lose it all. But sports bet is like one dimensional. Sure, you can bet on do they do this, do they do that, but in terms of just like the money line, it's either they win or they don't. You know what I mean? Here, you win if it could be anywhere in this range. So that's why I'm really interested in this trade on PG. And I can't put it on a Robinhood because I can't have enough money for it. Because I go to continue, I'd say I'm doing for 99 cents. Man, I'm not paying fucking Robinhood. Dude, this is how they game the fucking kids, though. I'm telling you. They'll say, oh yeah, we'll just give you this because the spread's priced so wide, and they'll just try to go halfway, but they don't know that you can just wiggle. They don't tell you they can just wiggle your shit around. Wow, this is how Robinhood makes money, guys. They're not gonna tell you that you can just ask for it cheaper. You might not get filled, but you could. And then they ask you. I hate when they do this too. It's just like this is a debit because we're paying. I'm spending money to make that much money. Credit means you're gonna receive money and collect that when the options expire worthless. So I'm not gonna put this on because it's too much. And I know some of you are thinking, but you have $1,200. It's only $100. But what if I lose this one? And then what if I lose? And it's just a bad habit. If I lose this one, and then I lose maybe a few more like this, then I've lost like $400. And once your drawdown's past 20%, it's really hard to recover. Because if you risk 2% per trade and your drawdown is 20%, and you start winning from there, it's easy to, because you only need to grow your account by 25% to get back to break even. But once you go below there, it's hard. Like once you're down like 50%, you have to grow your account 100% to get back to break even. So that's why my plan is once I've at 20% drawdown and my grace trades don't even work, I'm just gonna throw some like a few $100s back into this. So my plan is not to ever blow this up. So that's why I have another account that I can put this in that's not this, you know what I mean? But the thing is, these patterns are in smaller price stocks. It's all about just finding this, happening something else that's cheaper. Maybe you could do this. Oh yeah, I think I did Fidelity. I've never used Fidelity personally. Investor number. Yeah, you don't need an investor number. But yeah, you guys can do this in Fidelity, and definitely don't use Robinhood if you don't want to. If you have more, I know you guys probably have more money than me, etc. But for those that just want a free platform, no commissions, well documented in terms of you can go on Reddit and ask questions about it. This is not too bad. I've traded everything in Robinhood. I don't like it in terms of penny stocks or anything else. Because imagine trying to get out on like a trade in a penny stock that's moving really fast. Your feels gonna be so bad. You're gonna buy at the top, sell at the bottom. I've done it before. I've also made money with penny stocks and Robinhood, but it's just harder unless you're holding for a longer time. Then it's not bad, or you're buying like really nice dips, or you're using limit orders that you're setting like far away or whatever. You want to use Robinhood, but you're outside U.S. What? So I know I don't know what's the free option for those outside U.S. I don't know if Webull, if they cater to people outside U.S. Let's look that up. Robinhood for outside U.S. Like who's doing the first trade? Zach's trade, EU citizen. Because everyone's trying to compete with Robinhood. So I don't know these brokers. I'm sure they're not scams. Yeah. So commissions and fees. Some of these have commissions. Guys, commissions aren't even bad though. I mean, with commissions, you get better. You get better at a lot of things. Executions, I think you get what you pay for. But I think these are commission free based on this article. So yeah, check those out. eToro, yeah, it's another one. Like a lot of people around the world use that. But yep, this is the this is what it's all about, man. This all seeing eye, annual coeptus, which equals 58. May 8th is coming up. See what's Facebook. This is a good Facebook, guys. Facebook equals 58. Let's see what their charts what they're doing. What a good example. May 8th is coming up. We see how Facebook's here. So what do? I mark the time here again. So we're talking about here. Rejected off this SMA. It's the same thing that P&G is doing. So it's probably gonna get rejected, consolidate, maybe up here, around here, but then May 8th. So are these? Oh my goodness! You see, this is such a good example. We have weekly options expiring May 8th, right? So we're talking about spreads and how you put them on and you want them to expire to get your max amount of money, right? So wouldn't this be a trade where if you had a spread expiring May 8th on Facebook, you might just want to take it off May 7th, right? This is where Gematria will help you. This is such a good example. I'm excited. Facebook equals 58. Again, who cares if something doesn't happen and you could have made a little bit more money? I mean, with 1 day to expiration, with that happening over 1,000 times, again, it's all statistics. Over 1,000 times, Facebook is more likely to participate in bullshit propaganda on May 8th than they're not. Facebook 58, May 8th. It's not the Gematria, again, all these companies have contracts expiring May 8th. This is not specific to Facebook, but it's the fact that this company has weeklies. Okay, not every company, because only companies with weeklies have contracts expiring May 8th. So Facebook is a company with weeklies with expiring May 8th. So that's the trade that you would take off early. Perfect example. Do you have to? No. But yes, I would not hold unless it was a directional trade. If it was a directional trade and you were hoping, I mean, you could buy, if you think Facebook's going to have a bad news that day, especially their earnings here. When is their earnings? The 29th? I mean, just that alone, I wouldn't put any neutral trade on. I'd wait till after earnings, and then you'd still have time. That's a trade I might even put on. See what happens after earnings. See what the stock's doing, because again, anything around this, caught between moving averages, they just chop around. They just chop around. And how do you know this? You see it. It just depends. If it's strongly uptrending, then you can't just be like, oh, it's no, I wouldn't do a neutral trade here. It's like. This is like it's resting, it's recovering, it's gaining more steam. You know what I mean? They gotta take a break. They're collecting profits. So you have to understand during a trend, it's different. Granted, here it did kind of happen here, but honestly, it didn't. It still channeled up. So it has to be like after like something like this, a big sell-off. It's not gonna. I don't think Facebook's gonna go all the way back up and then continue where it left off. It's gonna have to fuck around here sometime. And that's how you know, if you're ever asking how do you know this, just scroll back left. That's what's called. People say look left. Just look left, and you see where it's done it before. See, caught between this 180 SMA and this 20 EMA. It ranged between here for like 3 months. So what's the middle of this? The middle of this is 118. So see that butterfly spread I was saying? You sell two 118s or 119s. Hell, for Facebook, just do 119. All seeing I 119. Start David 119. The who, Mark Zuckerberg. You can have some fun with this. There's nothing wrong with selling two 119s instead of 118. You can do 119. And it's all hindsight, but you could have done it just here. You have seen this happen. You've seen this rejection. It's okay, I think we're going to go back down here and be in this range for some time. At 120, you could have sold the 119. Maybe the 120 is more liquid, but it was just to be fun. 119, 124, and then 5 strikes down was what? 114, which is down here. See how perfect that is? And it would have ended at your spot around. by expiration. It'll have closed at 119.87. So you're 87 cents away from your target. You have made some decent money off this butterfly spread. There's also iron condors, which it just has to pretty much be in this range at all, and you just make just that same amount of money. But I think butterflies are more fun. You make more money, and they cost less. You tie up less capital in your account. Pound coin 666. Hey Jerry, good night. I'm glad you came. I'm glad we're all here with the stream. I hope some people are here learning something. I know that's a lot to take in, but again, you've heard me talk about butterfly spread a bunch, right? So all you have to do, it's so simple. You go to YouTube, you just type in butterfly spread, and there's so many people talking about this stuff. That's also why I like to share gematria and numerology. It's like not many people are sharing gematria and stuff. I like to share things that not many people are talking about. This I'm sharing trading because this is help. I'm trying to help people with this. You know what I mean? The stuff people need to know as well. But guys, there's no shortage of people teaching these things. If you're wondering who's good or who's not, just I think just find out yourself. I like Project Option a lot. I like Option Alpha. I like Tasty Trade. They have S&B Capital. These people I've seen. I like their stuff. That doesn't mean the other guys aren't good. I've seen some this Russian guy. I've seen his stuff before. It's pretty good. Yeah, saying it's new, so it's gonna take time to learn. So you can paper trade this stuff. That's things I feel like if I say to myself, oh, this is a lot to teach. It's no one understands it. It's new. There's no right. That means I would never put this in someone's consciousness. But my whole idea is, if I at least show someone what's possible, then they'll take their effort to go and look more into it. They'll maybe spend next weekend watching some of these videos, because one leads to another. I mean, I really like this guy because this guy's been trading for a while. He owns his own broker. He owns his options broker. They talk about options. They're so passionate about it. Do I agree with everything they say? No, I don't agree with everything every trader says. You know what I mean? There's things they do I don't like to do. There's things I do that they don't like to do. So, but they'll explain it. They'll say why I like it, and you'll say, okay, that's cool. You'll find more of their videos, and look, like they'll have podcasts. They have playlists. They tell you. Some people have beginners playlists. You know what I mean? Options trading 101. You know. I mean, just think about 81 videos, but you spend like a month or two just watching them all. You don't even, you watch a couple videos a day even. Take notes. Some of these are private, but I think it's all about just like figuring out the concepts, being exposed to something, and then just like looking at it deeper, from leveraging other people who have been doing it way better and longer than I have. Yeah, Aloha, you can add me in Discord. Trying to remember my number. I guess I should have that memorized. When it opens. Jesus. So Marty, my Superfly, nice to see you, man. Dow Future Slaves, 23,940, minus 59 today. Dow Jones down 59 points, just to homage to the slaves that are making it churn. I don't even know how to look up. I don't look at the Dow like as the market indicator, so I don't even know. I've never figured out really how to find the index on this charting platform. I can go online and look it up, but I don't know what to type in for this. An information age, 888. Nice. Hey, Randy. Hey, Drew. You've been thinking about shorting the market for the past 3 weeks. It's funny you come out with this live stream right now. See, I'm glad, Aloha. That's exactly it. I was thinking, I was like, hey, look, people try to make money. Guys, they say everyone's like make money online. This is making money online. It's called online trading. This is, so it's like, you can sit there on swag bucks. That stuff's not bad, but like this is another way to make money online. And I figured, showing people my perspective. Yeah, so shorting the market. If I want to short the market, I would wait for so very, very, very short term. I don't even like to be reversals, but this looks like it's due for some sort of pullback. It's a low risk. I hate to say that word because this shit gaps up all the fucking time. I mean, this thing can literally gap up like 297 tomorrow. I mean, literally. I mean, this shit's been crazy. But like, my favorite short would be up here at the SMA, this 180 SMA. Maybe the first candle make a new low off of it, or even as soon as it hits it, put on like a credit spread on probably on. So there's ETFs that follow this as well, but things are different. Like this ETF is further away from this. You know what I mean? It's just different because they decay over time and all type of stuff. SPXL, same thing. UPRO has weeklies. This doesn't have weeklies. That's the difference, at least in my perspective. And weeklies again are the options you get to trade every single week, which can be good or bad. High risk stock 666. I like it. Disinfectant market might go up, especially when people find out how nice it is to get rid of Rona. Yeah, disinfectant market. We can look at Clorox. Clorox is another one of those that's been doing well. It's just, again, I don't. So with the more expensive the stock, the more money you need to trade it. And personally, I just don't like higher price stocks. It's a personal thing, and I mean, that doesn't mean you can't trade it or you can't make money off it. I remember trying to trade this back here. Also after this big sell off, I didn't think it had much more to go over time. Like to get it back to 214, it's gonna take a while if it ever even gets back up there. There's a lot of bag holders up here. So you see how this sold off here? That's why I'm saying I could say, oh, I could think this is gonna sell off. It's easy to see in terms of it's hitting a resistance. It's at 198. It's hitting the psychological resistance of $200. So people are in their mind, $200. We'll sell up there. Funds are saying, we'll sell at 200. We'll buy it. That's how they think and round whole numbers. You have these people back here, these bag holders at $200. See these false breakouts and everything. I mean, there's people holding up here. They're trying to sell, and that's literally what they did. They're selling, and short sellers are selling too. And the market AIs, of course, coordinated all, playing all along. And then here, the next best entry here is the next daily candle to make a new high. Because it's consolidating, so it's pulling back onto this 20-day moving average, exponential moving average. So the next, look, see my alert right here? I mean, that's what I'm saying, guys. I'm like, I'm not sitting here watching these all day, as it looks like, but like, it's easy to just, because I look at my screener, I look at the scanners, I've been looking at Clorox, so I've already put this alert here. So you want the next daily candle to make a new high is the entry for a bullish trade. And your target would be 200. I'd retest at 200. And how would you do that? You can buy in the money. The safest, and by safe I mean just like, because if you buy in the money calls, you're buying something with value, like with intrinsic value. There's not much time value in them. So you buy like calls over a month out at like 187, and then you just with a delta of 80, around 80, because then every time the stock dollar goes up, you're pretty much making some. Every time the stock goes up by $1, you're pretty much making almost around that much for the shares you have. And you don't need to, your break even's not that high and all that stuff. So I'll show you the options chain. So this is how you would play this. You could also sell the 200. That's the thing. Like this is a really good example for a bull call spread. We see this 200 resistance. It can eventually break this, but it might even have more trouble up here. So if you think, oh, it's gonna probably test 200 again and sell off again, you can sell the 200 calls or the puts and buy the you can just do a spread. A bull call spread or a bull put spread, because you're expecting a moderate rise. You're not expecting to go to like probably back to 214. It could, but not within your time frame. See, confluence of nasty numbers. Yeah, but this is a nasty company, Clorox. But yeah, if you're like, I don't want to, buy shares, you're not buying shares of this company. If you have the option contract, it's just a ticket that's probably gonna expire worthless anyway, especially if you're selling them. So another good example, and this is part of a sector. I think it's the consumer goods sector. So I think the best way to get started then, 'cause I know people are like, okay, where do I start then? It's just I would try to open up an account where you can paper trade. There's other places, but this with TD Ameritrade, you get the charts. It's all free. You get the charts, you get the paper trading, you get the data, all for free. If you're a U.S. resident, I know if you're not in U.S., there's alternatives. There's Trader View for the charts. You can paper trade with your hand, just by hand. Honestly, I mean, just paper trade and figure out like how things work before you, because you're gonna make mistakes. You're gonna lose money. You're gonna get emotional. So why do it? Like I paper traded options before putting real money in it. I paper traded for months, and I was profitable for all those months straight. So I proved I was profitable before I started putting money into this. But again, it's your money, especially if it's the government check. You just want to blow it away. You know, do what you want. But the next thing, you would open up an account with real money. I think with real money, it's good to know how to trade real money because you use a different part of your brain doing things with real money. So you want to train that part of your brain. And this, I know I said 1,200. You're like, oh, I didn't. So one, Robinhood, they don't put everything in right away because as soon as I got that 1,200, I sat it for a bit and then I got transferred it in. So I had to wait for the other 200. So there was like 1,000, and a lot of my money is tied up in buying power because like you need like buying power to put in these spreads. It's like collateral, but if the width is like 50 cents, it's like $50, and over after hours, like the spreads between the bid and ask for the options are just they're all messed up and stuff. So this, like, the market will open tomorrow. I'll be back at like 900 something, and this can show you. I mean, this they're saying that I spent $21 in here, but it's worth but I obviously don't owe them $150 because it's a spread, so you're covered. Like, it's safe. You're not doing anything naked here. So yeah, I mean, it's that simple. You just you need your own strategy. Some of you might not even like the charts. Some people don't even use charts to trade. They don't use candles. They don't use any of this stuff. That's why it's hard for me to say, do this, do that. I'm just showing you what I like to do, because some of you might find that you don't like any of this at all. You just want to play the probabilities. You just want to look at the options and say, oh, this is like probability to be in the money or whatever. Oh, okay. I'll just play the percentages. I'll play the delta. Delta 50. I find out this selling this works all the time. You never have to look at a single chart to do some of this stuff, but I like to use charts because it just tells the whole story. It shows you where the money's going. It shows you what. I'll show you some of my recent cool trades I did, like this one. Oh my goodness, why did I forget these names? Okay, I know mRNA. This one is a good one, but I did not make that much money on this for what I would have. But it shows what spreads do, like the negatives of them. So with spreads, you cap your losses, but you also cap your gains. So I saw this. See, this is the pattern I saw, and I know mRNA is this to me is always weird penny stock. It's never been that low in price, but this thing trades just like a small cap momentum stock. I'm surprised it's never been lower than $11. It blows my mind, but it trades like it's $2 to $3, and you can just see, gap up, huge. I mean, this script's crazy. I think this is like a low float runner, relatively speaking. So, I saw this pattern here. I saw a lower high here, but it's still channeling up. But I was okay. This thing pops up, sells off really quickly. It doesn't really hold its gains like that. This coronavirus stuff, all they have to say is like, our vaccine sucks. Whatever they're working on, our shit fucked up. The FDA doesn't like us, or this company did it before we did. That's a real thing I was thinking. Any company or the federal government can come out and say, "Oh, we have this solution instead," and then their shit just tanks and their whole run is over. So I was like, okay, I'm still bullish on it. I made money on this. So I was like, okay, I'm gonna sell the 37 calls and buy the 30s. So I essentially bought this at $30, or it was above 30, but I bought $30 calls. And this thing ended up going to $50, $56. But I sold as soon as they got up here because I hit my target. I was okay, this thing's gonna go back down to the wait. It was back here is where I did it. It was back here. Here we go. I was looking wrong. I didn't trade it back here. I traded it over here. But it's the same concept, you know. You see, it's pretty much triple topping almost. This hit a higher high, but not by that much. And then after this, I'm like, hey, there's still some bag holders. I don't like this. I think it's gonna hit 37, and look at this. It just like exploded. But I couldn't make more than $400 on this. That was the most I could have made. But I just got rid of it when I hit this because I was like, okay, this thing can easily sell off back to the 20, and that's the end of its run, and I could hold it longer for just $200 more. You know, 50% of more what I put in. Because what I was expecting was this staying up here, and no matter what, it just won't get back down to 37 by expiration. But I was just like, it just wasn't worth it. So I sold at my target because for that market was. But you just see what these moves, these things can do. And if I had just bought a long call, and here's a lesson I'm gonna teach you then. On these very crazy volatile stocks that can make these big moves, you probably want to buy long calls on these. Like, you don't want to do a spread on these. Spreads make the price of the trade cheaper, but you cap your gains, and you don't want to cap your gains and shit like this. Because if I bought the $30 calls and sold it, 50s, that's $2,000. That's $2,000 I could have made off this. Do I have FOMO? No, I don't give a shit, guys. Again, these moves happen all the time, market. It's just a matter of time before I find one of these. I think I remember the name of this. Inseego. This thing, I was in here. I didn't play down here, but I was in here with a straight call. A $10 in the money call option. I got for $280. And this is not my Robinhood account. And I sold it just today because it hit 14. And this thing can go to 15, 16. But again, I was like, okay, this thing, I think really is going to go higher. I think I did sell too early, but again, their earnings are close, which could easily be good. I like to take my money when I get it. It's all personality. Some people will hold this thing to 20, but this thing might not go to 20. This thing can easily pull back for this next leg up. And then guess what? I'd rather just buy another call or something for the next leg up. So that's just the possibilities of what you can do. A digital currency is 88. Download 88. Freedom as digital 888. Numbers equal 888. Vision 88. Like program and poison. And banks 88. Running the show. Banks. Trump 88. So we drop on Facebook all the way to Friday, bro. Oh, so yeah, going back to Facebook. So my Facebook thing, what I think they're gonna do. Yeah, guys, I can always be completely wrong, 100% wrong with everything I say. I always take that into consideration. But I think it's gonna, because and they clearly tried to break above and hold above this. Only thing is it closed halfway here. This thing can easily open up at 187 and consolidate here and actually like close above. But that's the thing, they could trap people, close above this green line, hold above here. Here come May 8th, sell off on some fake news bullshit propaganda. You know what I mean? But again, it could be good news. It could be the catalyst that actually sends them back into like a confirmed uptrend. So it could go both ways. It's just that's the date that there can be volatility. You could put on a call ratio back spread where if it goes your favor, you make a bunch of money. If it goes a bunch of ways not your favor, you make a little bit of money. And if it just sits there, you lose, but it has to sit there for like days for you to lose even a decent amount of money. And I might put on a call ratio back spread. I mean, these things I'm talking about, I'm just thinking I'm probably going to put on some of these trades. They sound pretty good. Like a call ratio back spread the day of, like May 7th, May 8th even. Only thing is they could put it out, the bullshit May 7th, Jews 57, for stuff that happened May 8th. You can keep that in mind too. Coronavirus 56, that's coming up too. Could just be a whole chain of stuff with them. Yeah, but I'll show you that trade. And so how and you'll like the graph on that. So what you would do is you'd sell an option that's in the money and you use it to buy a bunch of out the money options. So if I think that they're gonna have some good news made, you can do this to the downside too. You can do this if I say I think they're gonna have a sell off that day. I don't believe Facebook's having any good propaganda out that day. I mean I could be wrong. So if I think they're gonna actually it's gonna have such a big sell off and go back to like 175, I can sell like this at the money 190 or even like a 193 or whatever put and buy a bunch of like 175 puts targeting 171 and you can make a shit ton of money. And I'll show you how that looks like. And it's one of my favorite trades. It's just harder to manage and it sucks when a trade does just sit there because if it sits it's just decaying. You're losing all the theta time decay. You're just eating all that shit up and losing much money to that. But after 3 days, that's about like 50% of what you put in. So if you cut your trade after after 3 days, if it's not moving, you're not going to lose that much money. So Facebook, you go to May 8th. But the thing is, you wouldn't. Here's the trick: you wouldn't unless you can do an all or nothing trade. If you want to make a shit ton, you can buy some out the money put option. You could. I mean, I got 180, 175. Maybe like let's see if their out the money put options are. See, they're a lot because it's just an expensive stock. But what I was thinking is you get them cheaper, and then it would actually hit your strike because it's gonna sell off that day possibly, and there'll just be so much in the money, and you just make more money that way. I mean, if I had a lot of money, it'd possibly be something to do. But I think a call ratio brag spread is cheaper to do, and if it goes either way, you do well. So what you do. They printed a negative story and retracted it. Oh, the WHO, the World Health Organization, did a head fake on Gilead. Watch the Phoenix rise. Yeah, Gilead. We'll look at them next. Gilead just had a big move. Some fake news bullshit crap propping in it with them, and their stock moved. A big move. And that was one of those trades I was looking at. So again, that scanner I was showing you, that shows you these stocks before they move. I knew Gilead was going to have these types of moves before that stuff came out because it was the same type of pattern that I showed you in mRNA. It was bull flagging. I hate that this shit's still here. It's blocking my screen. I hope it'll go away. But oh, my cat just turned off my mic. I hope this was just recent. But because you guys seem to have been hearing me. What's up, Bob Barker? Glad you're tuning in. Yeah, we're still going. I'm showing you Facebook how to play. We're gonna make a bet on Facebook for May 8th. We're gonna put that together, but just showing you Gilead real quick and how they're doing the same type of stuff. See, there's just more. I mean, choppy as fuck, right? I hate choppy stocks, guys. And yeah, these bigger stocks are choppy too, but it's going up. So this is around the time. What was this? May 13th. See, this is around the time, May 13th was the day I put on the mRNA trade. So Gilead was also on my list, but look, it costs more money. That's why I didn't put it on. It's just more expensive. It was like, okay, this takes more capital to put on. Why not mRNA, which made it an even bigger move? And what did Gilead do? They put out some bullshit, fake news crap. I don't know what it was about, but their stock, jumped up, gapped up, and look, it only went as high as the previous high. So just think about all the people reading the news, and this is so important. This is why, you can say technical analysis doesn't work. It's bullshit, candles are nonsense, all you want, but come on. It's like they put out the news. They have all the retail traders buying up here. Oh, Gilead said this, they said that. I'm going to invest in it. They call their broker, buy me 1,000 shares of Gilead, $86 or whatever. They're literally buying at the top. Sure, this is a valid place to buy, but guess what? They're still holding. They're not cutting their losses. This is a nice breakout setup. Sure. And that's what this, people probably try to buy this breakout. Wait, it hit highs of 85.79. This highs of 85.97. I like those two reflections, but so this didn't even hit those highs. So breakout traders probably weren't even here. Maybe it's some about the anticipation, but you know what I'm saying? Like, you could have easily seen some resistance here, not bought, just because of some bullshit propaganda. And look, now it might not even go up here again, or it can over some time. But it's still bullish. And look, this right here is the next daily candle making high. This is this is a buy signal. I'm not telling you to buy Gilead, but this is telling you to kind of buy. I don't like this here though. Look at all this volume here, this red volume here. But even then, and there's a lot of bag holders up here too. But I think you can still, there's some juice. They can get to 82. I think this thing can maybe make it close to 82 before maybe selling back off. But you know, who knows? Let's go back to Facebook and make that trade for May 8th. Call and put on both sides to leave a bad trade. So that's what you might want to think. Oh, if my call's doing bad, let me just buy a put and even it out. But that's the worst thing you can do, because that put you bought, there's a lot of premium in that as well. So what's probably going to happen is you're going to like, let's just look at this Facebook chart, right? Let's look back here. Let's look right here. See this dip right here? Let's say you bought a, or no, let's look up here. You bought a call right here at 217. So let's say you bought like a 217 call option and you didn't sell up here. It went down here. So you bought a put instead, right? And actually the next day you actually probably would have been in the money. But let's just say it didn't happen. Let's say you bought a put here. Let's say you're on vacation, you missed this. You bought a put now, and it has to get to like, especially because this just happened, it has a lot of like premium in it, and a lot of IV or whatever, intrinsic value, or not intrinsic value, implied volatility. So let's just say your break even is like 218, because you paid premium for that put option. So you need to break 218, not put option, goddamn. I'm confusing myself. So you bought the call here, it's here. So you bought the put here. Yeah, you bought the put here and it's going up. And that's what I'm saying. You bought the put here, you need to go down, you need to go down here to break even, it's going up. You see how your call now sucks and your put now sucks? Because you're just getting chopped around. But what I'm trying to show you is a better way to play both sides, or to fix maybe a bad trade. Risk it all 666. I love that, Forever Awake. Bank account 33. Yep. Yep. Never bet against yourself. And that's true. That's very, very important. Never bet against yourself, which means trade your plan and plan your trade. That's what it's like right now. You're watching me plan my trade and trade my plan. Like, if that P&G setup was on a cheaper stock, I'll put it on my Robinhood account. You'll see me put it on. Who knows? I'll find some trade to put on. We'll put on some trades tonight, but the Robinhood account. But we'll probably do that after this Facebook look at. So let's look at May 8th. So for this, unless you're doing all or nothing, you want to go like a month out, because again, time decay is gonna fuck up, because you're gonna buy a bunch of. Well, I'm thinking it's gonna go down. So we're about to buy a bunch of put options. So the theta on them, the time decay on them, are gonna really fuck with us if we buy like the May 15th. That's not something I want to do, unless you really know it's gonna sell off. You're trying to make a shit ton of money off it. But why not buy them? Like, why not buy the June 19th or somethings? And or even not even that far out. Maybe like the June 5th, the May 29th even, just like a month in time. I think the June 5th. 56, 65 coronavirus numbers, let's use this date. So this is when they're going to expire, but we're going to take this trade off well before then. You do not want a call ratio back spread to expire. You do not want to hold this into expiration ever. Unless it's like super in the money, in your favor, like for some reason, like you're just making money every single day out of it. You know what I mean? But that over time is just not going to happen. You know what I mean? Like after that big move, you just want to take your profits and run, or hold maybe for the next leg if that's your thing. But anyway. So I found an option with a delta around 80, 79, 81. What is this? 165. Or we're doing a put one. So let's look at the puts. Yeah, I knew that was wrong. Okay. So let's just take the 79 delta one. 210. So we're going to sell this 210 put. And then we're going to use our credit. So we're going to collect $24.10. We're going to collect $2,410. Because again, you're getting 100 shares per contract. So we're gonna collect $2,410. We're gonna use this to buy some of these out the money put options from and then we'll look at that. We'll analyze the graph and see what we need. Let's just buy some 185s. So you buy them until, okay. So if we buy another one, it'll cost $9 or $975, and then we'll have to pay a debit. See, so that's what you can do this, but the whole point is to collect the credit after it. The whole point is to collect the credit, which means you're gonna make money. So this is pretty good. So it's it's 2 to 1. You don't want 2 to 1 for ratio back spread. You're pretty much doing another spread. You want at least 3 to 1 to get that like leverage, because we're swinging for the fences here. You actually want to make something here. So if it's 2 to 1, that means that we need something more out the money for our put options. So maybe here the 180s are good, because we're expecting this to go like 175, 170 anyway. The 180s are good. Buy 3 of those. I just gotta remake this. So we're selling the 210s, buying the 180s. And guys, I'm probably not. I've only done a few of these, and they didn't work super well. I've done some before that worked super duper good, but the ones I've done recently for the earnings. But that was just because it was during earnings. Shit just didn't move. Sometimes they don't move during earnings. So this is perfect. 3 to 1. So we sold 1. We're buying 3. We're gonna get $212 if we're wrong. If we're right, we're gonna get a fuck ton of money. Isn't it awesome? The only way you lose is if the stock just doesn't move. But if you think on May 8th, Facebook 58, they're gonna have some bullshit propaganda that's gonna move the stock. But let's look. We might have to, change the width of our strikes. But this is one of my favorite setups because I think it's so cool. So this is where you don't want to be. You don't want the stock to be at 180. Yeah, you don't want your lower strike, the shit you bought, the options you bought. You don't want it to just sit there at your area over time. But let's just say see, the thing is, we wouldn't buy these today anyway. We would buy these May 7th. So it's kind of hard to show this with how exactly it would be, but I want to show you the step. Move over to. Okay, good. So now this is May 8th. So this blue line represents May 8th. So this is what's going to happen on May 8th. If we would put the trade on even now for that. So on May 8th, if this thing happens, and Facebook just has some bullshit news and sells off to 176, because it's probably going to sell off and get caught on here in this 50 SMA. It's not going to sell all the way down here. I mean, it could. It'll be nice. But maybe it might even sell down here, maybe 180. And I think 180 might be too far, even far out the money. That's why I might even do sell something deeper in the money and then buy a bunch of because I like the 185s. But anyway, let's just say it's going to get to 173, 172, right? We're going to make a bunch of money here, but if the stock goes up, where's it at now? It's at 190. I mean, seeing as I construct this poorly, let's adjust this. I know the delta's cool on that one, but pretty much let's sell the 190s because that's where we're at now. And I want it so if we break the SMA and go above 190, we can still make some money. We don't have to get to 210 to start making anything. Unexpected error. Fuck it. And then let's buy something that's more out. No. See, that's with these higher priced names too. It's just harder to construct these for me. Okay, we're making a different example here. We're going to be very bearish in this example, just for example's sake. So, $165. So let's say we think this thing's going to 160. Which is possible. I mean, they could have some bad fucking news, like, Mark Zuckerberg just let me not say anything before YouTube just strikes me on some nonsense, but let's say they're going to 160, right? Now this trade is saying, so we're spending Right now the stock's at 190 something, right? So on May 8th, if nothing happens, we lose 400 bucks. If the stock needs to sell off to 178 before we break even, and anything below that is money. So it gets to like 160. Let's say it gets to like our target of 160. We make $1,805. So you're risking about 400 to make. If this is your target, 1,800. So that's over four. That's over 4 times. That's 4.5 times, risk reward. And let's just say we're wrong. It breaks that SMA. It breaks 190 and it goes to like, 220. See, again, this is constructed poorly. It shouldn't have to go all the way up to 226. No, it can. No, it can. That's the whole point of this. That's the whole point of this. See, I'm explaining this bad. It can go to 226 if it was super duper good news. I mean, again, it shouldn't because it's breaking new highs again. So I was right, but you know what I mean? That's why it's a poor example. I didn't sit down and actually construct this trade. But let's just say the news is super good and simply 226, you make the credit. So you make that like 300 bucks or whatever. So if it goes a lot this way, you make money. If it goes a lot this way, you make money. If it sits here, you don't make much money or you lose money. So and you can adjust the width of the strikes and how much you buy to make it kind of more in your favor. But even then, I don't know what I'm going to do. I don't like this. I like selling it. Oh, I never changed this. I changed it over there, but not here. That's why. I was like, there we go. This looks a lot better. Sometimes it gets kind of wonky. But I hope you get the point. I mean, I feel like I've sat on this for a while. I think you got the point of how this one works. And I know you forgot. You might forgot, but look at the cool part. Ratio back spread. See, this guy, ratio spread. All these people telling you about him. See, he's showing you. He'll teach you better than I did. He'll show you how you can use it better than I showed you. Other ways you can do it. What he explains on his whiteboard. Bull calls. So we did a put one, but bulls if things can go higher, and you want to make money on that side. So yeah, plenty of things to look at. Speaking about 5/8, can we expect the Masonic accumulation ritual? Remember the Ali G ADL harassment? How many days ago was that? Let's look at that. Ali G ADL. I don't remember I hope we can find it on here. This Sacha Baron Cohen ADL. Yeah. Yeah, we're gonna see how long ago this was. This was published November 21st, but I want to see when they're telling us. Oh, November 21st. The greatest propaganda machine in history. Yeah, he's part of the greatest propaganda machine. Yeah, I guess I remember this video I did. Zach was all over this too. This propaganda actor. On Thursday. Let's double check. I don't know, this seems so much longer ago than this. It was a Thursday. So November 21st till May 8th. Interesting. Why can I find this? Here we go. Let's see. 197 days. 6 months, 13 days. Wow. 6 months, 13 days. Zionist equals 112. 613 to 112 prime. Guys, they're going to do some shit on May 8th. The Mark Zuckerberg's going to participate. But the thing is, Facebook's very well going to be into propaganda, but guys, the stock very well won't move. Like, it's a good day for Facebook propaganda, but I've even shown those days can hit, the stock still won't move. Which again, then I've shown you how you can profit on things not moving either. I think the stock's gonna be in this range by then, and even if it sells off, they'll still be in this range. That's why I think placing some sort of neutral strategy, an iron condor, a butterfly, in this type of range, is the safest way to go. Because at the end of the day, it's just about making some profit. Like you're not gonna make that much money as a call ratio backs for the thing. But again, we tried constructing it. This needs to move a lot to make any sort of money off of it, unless my widths were just too high. But I don't know. You saw what I tried to do. It shouldn't have been that difficult. But again, it's these higher price stocks. I don't know. I just don't know how to trade them, I guess. But the thing is, it's not, you can't use a strategy every single time. Sometimes strategies just don't make sense. The risk reward's just not there, Because think about it. If you could do call ratio Braxfords whenever you want, every single day, I mean, sure, maybe you could. Never is now 144. Is censorship 144. My mic isn't picking up. How about now? That was turned off for a second. Y'all hear me? Oh no. Let's see. Hello? It's picking up on the stream. Someone type in the chat if you hear me. Wow. Oh, yeah. Oh. Oh, thanks. Wow. Okay. I was making sure. I appreciate it, guys. So, yeah. So, this is up against Zach's trade. This is apparently stock and options trade starting at $1. This is the account if you're not in America that we looked up. But yeah, a dollar per trade if that's what they're really doing. I mean, especially for options, that's like Tasty works. If you have money more than this much to put in, I would open like a Tasty trade account, a Tasty Works account. I'll make it a little louder. Oh sure. Damn. So this is up as much as it can go. Let's see. I think. Input. I think this is as high as it can. Oh, look, 72. 93. Is this better? Number 93. I hope I'm not too loud for some people. Here we go. And the mic's closer to my mouth. So yeah, let's put on some trades. I think that's what I should. If I just put on the trades, that might help people see. So let me put on a trade. So let's look at my portfolio first. I always kind of want to balance it based on what the market's doing. So right now the market's neutral. Going back to this S&P 500, it's neutral. In my opinion, it's still. I mean, I'm still like bearish in a sense because after this, it looks like it wants to roll over. I have still bullish. I have some bullish trades on. So I have some bears, some bulls, and some neutral. I just kind of have a mix of them all. When the market was back here, I had a bunch of bulls. I had like one bear, all bulls, maybe a neutral trade, and they all were winners. That's the thing. When the market's trending up like this, it's just the easiest, I think, because you just put on a bunch of bullish trades, and the majority of them just do well. So let's look at my portfolio. Let's see what I have here. So I have this Bank of America butterfly, 21, 22, 23, call butterfly. This is expiring Friday. So it's like a really short. Let's see what I did on here. I'm probably gonna lose this. 21, 22, 23, yep. So you see, and then here's the thing, and I was saying this earlier, you can, that's why that Procter and Gamble trade. Oh, nice. I'm glad it's perfect, Moon. Nice. So, available jobs 666, job center 666, U.S. job rate 666, ESP power 117. Thanks for those. So I even marked this on my chart. This is where I wanted this to be, by this time, and it still can do that. It can still can turn around and come back down here, or it taps here, it ends up here, and I just didn't give myself enough time. But again, that's why I'm. So here the trades I'm focusing on most in this account. I'm glad it's very clear. I'm focusing on credit spreads and butterflies if they're literally ranging. I mean, because I look at this. I mean, I look at things like this and say, how could you not have put? I didn't, but I see this range. It's like this is a good range for a weekly butterfly, right here, here. So, you know, if it's ranging, maybe I should I don't know about weekly iron condors. I think if it's longer time, maybe for that. But again, I'm kind of messing with those. But going back to the trade I have on there. So guys, I'm so used to forgetting what I'm trading. Guys, I don't even care for half the companies. I don't know what they're doing. I don't know what they're about. I know this is Bank of America. I know it's the you know who's the you know people I speak against every single time and make a video. This is their stuff. Bank of America, of course. I'm so glad we brought this up. Never forget their logo. You know, the 311s, banker equals 33. Their flag is 311s. This is running the show. So, I spent $22 for this. And I think if I was right, I would have made 70 something. So I'm spending $20 to make $70. Lower odds of success, but when it is, you win. So I need a 3 or 4 times, if you're wrong, is for like one win. You know what I mean? So it's okay to lose a trade like this. I'm completely fine. I'm not gonna take it off early. I don't give a fuck. Because again, this by here, it could easily turn around and be back in my area. If it is, it is. If it's not, it's not. But I put it on back here, thinking that okay, we're see how it's curling up here on this moving average, trying to recover. I did see this overall pattern. I saw this overall channel. I saw this first, how it's channeling up right here. But I figured it was going to do this until the 50 and then sell back down. Only thing is it can sell back down and probably consolidate here, even right above. Like it can easily close right above. And I could have widened this, but when I widen it, it costs more money to put on. And then it becomes like more of like a 1-to-1 trade. And I definitely don't like to put on butterflies if it's like a 1-to-1. I'd rather just put on a credit spread. Guys, I love the gematria. Anyone listening in, definitely check out the chat. Everyone's putting in some good decodes. Bill Gates, the CEO, 666. Banker, 666. And then 77th Brigade BA says, Trump administration just passed FASB 56 that gives the Federal Reserve go black ops for the nation's economic development. FASB 56, and that lets them go black ops with our economic development. It's just crazy. And that's how they do their manipulation. And you said the Fed keeps pumping this money to this. It's kind of interesting someone brought that up earlier. Like, I could, always be wrong, but my personal opinion is, like, I like to short the market and be short price the market in terms of just not liking the whole thing. But I think just like strategically, logically, I'm more bullish for the market because of shit like this, man. It's like it sells off, and they're like, what do they say? Oh, the market, the federal government just steps in. The Fed steps in. This happens. This bailout. This saving grace. This thing. I think there's so many more like news events that pump up the price of stocks than tank the price of stocks. And you see that from penny stocks all the way to Amazon to Berkshire Hathaway. There's just more good news pumping stocks than bad news selling them off. It's just when the bad news comes and they sell off, they sell off more violently. They have these bigger sell-offs. But this is all based on one news event. I'm saying? One main piece of propaganda, the coronavirus, caused all of this. And this is just, all different sorts of things. You know what I mean? So that's why, like, I could just see them saying all sorts of nonsense, and before you know it, Bank of America's at the all-time highs. I mean, they run the show, guys. They can do it. It's not impossible. So, I see this, and then my time could have been too close. But again, I was also hoping for a possible, okay, maybe. And you see, like, I don't know. I don't like how this volume's increasing, but we'll see. It's just one trade. That's why the plans have a bunch of trades going on, so one trade just doesn't matter. Fat Cat and Friends, the kids' brainwashing show. I'm sure it's very coded. So here's my next trade. This one, it's kind of I guess break even. It's down a few bucks on it so far, but I mean again, really don't know until expiration. Because I like to hold it. I'm position strategies for max loss and holding expiration. That's my main thing. Might take it off the day before if I'm mostly in the money, sure. But here's Pinterest. This was a stupid reversal trade. I don't like to play reversals, but again, it was like okay, it's. You see this doji here? This looks like. Oh my god, I did it again. Oh my goodness. So yeah, my cat will come and sit on my Wow, it's again. Oh my, unbelievable. All right, all right. I'm making sure that does not happen again. All right, now it won't happen again. That's all my fault, guys. It's not YouTube. It's me. It's my. What's my? It's so there's a mute button on this mic. So this cat comes and sits on it. I don't hear anything, so I have no idea. And I have the light covered because I don't want the blue light. It's just convenient, but I don't want the blue light shining in my eye. Because you don't want blue LED shining. You don't want any LED shining in your light. That's why I hate this LED here too. But I guess that's what this all part of this agenda. Guys, I want these LEDs in your eyes. That's what they're changing all the light bulbs. That's what they'll come in your house for free to change your light bulbs. That's why they'll change the street lamps to LEDs because it ruins your eyes, and that's what they want. But it's, I guess for another video. But yeah, what I was saying here is that here at 36, this is not a chart you invest in. This is an overall downtrend, especially since 2019. See? Look at this gap down. It did fill this gap pretty nicely though. I'll give them that. This is the chart that fills this is the stock that can fill its gaps. Down and up. I like that a lot. So I really like the chart, but I hate the company. I hate how they're scamming the people. What I was saying is, I want this. This is a doji up here, which is like a sign of a reversal. Put a sticky tape on the light, electrical tape. And this windsock, that's a little easier. Because the thing is, sometimes I like to have a light. Like it's nice to have it in my peripheral sometimes. Like I can see like the glowiness of it, which helps. It's not my eye when it's not on. So like, but then it's hard to explain. So it's like kind of goes both ways. But but you see how it is holding above here, and again, this could hold up here, and then just boom, 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 and then bam, I lose. It's very, very possible. But it's like, come on, does this thing hold its gains? Sure, maybe here. I guess it does. But even then, I mean, it has some sort of sell-offs. So Pinterest, we're gonna get the gematria, This is expiring May 4th. Let's see if we have anything from them. Pinterest, they're by the numbers. They're from the Freemasons. If not originally, they are now. Pinterest, North America exposure. Why am I playing them from earnings? I don't think I am. Yeah, see, my trade's over before earnings. And I made sure that, I made sure I have to hold some of these through earnings. So, I didn't mean to go here. I meant to go to Wikipedia. Social media company, 300 million monthly active users. Did they really, and see, traded as NYSE pins, and that's what we're looking at. So they tell you, what it is, what they're trading as. Social networking. Ben Silberman, key people. Evan Sharp. Ben Silberman. Do I have to say anything else? Unbelievable. Jesus Christ. This guy doesn't give a fuck. He loves how his investors are, caught in this type of stock. He loves it. Fucking sick. Pinterest. See what their name equals. Pinterest equals 45. Pinterest. Can you see why I put myself in? Pinterest equals 45.54. I have a trade with them expiring on 4/5. Oh no, it doesn't. Their earnings is on 5/5. Well then look at it. 5/4. That's coming up. So good. I thought I had that. I saved myself. I didn't even know that. But you see why it's important. I'm glad. I could have easily had a Pinterest. I do. I have my other account. I have a Pinterest trade that's expiring the 8th. But it's not doing well. It's pretty much hitting max loss anyway. So, but it could turn around. That's the thing, because with options, you position for max loss, you set it, forget it, you don't even worry. So, this is another example. If you have some expiring May 8th, maybe you want to reconsider. Pinterest 54.45. Let's see what they do May 4th. Unbelievable. That's right here. And I'll be out of it by then. But their earnings is the next day. I don't think it's a coincidence. You know, Pinterest 54.45 earnings the next day. Could be coincidence. I don't think so though. December 2009. Yeah, so nothing much more about them, I guess. Guess we'll move on to the next one. Because it's got a place one. I'm kind of showing what I have. We're not going to break these all individually down. I mean, here's a $9 call. Here's a different one. Here's not a spread. It's just a straight up out the money call option. Here's why I bought this one. It might not hit. It's more of a gamble. But I guess these are all gambles. But here's what I wanted to do. I spent, what, 20 bucks? $22 on this. So this needs to hit $9.22 for me to break even on it. And then so this play, I'm thinking by May 15th. I mean, this is a smaller price stock. I should have checked the float on it. I mean, how many shares are available to trade? Because that's going to help. There's a low. Oh, I saw that. Oh, 184 million. Okay, it's high. I thought I read $1 billion at first. What's the market cap? Yeah. See, that's important, guys. You want to look at the market cap and the float, because that means like the float is how many shares are available to trade, and the market cap is how much like the company's worth or the value of all those shares are worth together. So it's pretty much the shares time the float times the price of the stock is the market cap, and this is a higher market cap stock, so that means bigger moves are less likely and harder to happen. But then again, they can happen. I mean, you saw what happened here. All this is a bounce to the lows. It still went from, almost 100% move in like 2 days. So institutions, investors have the type, and their earnings are here. So I'm hoping that their earnings will be good. And it was helped me out. I mean, it was a gamble. Their earnings could be shit, and this call was expired worthless pretty much. But their earnings could actually be good. It could be the catalyst to send this up here. Probably hit resistance and I'm selling here at this SMA. It's probably gonna hit this SMA, close here for the day, and I'm just gonna sell. So I'm spending 20 to potentially make, $80. No, yeah, $80, maybe a little less. And I could have bought more time out, but it was just been more expensive. A lot. It was been twice the price. I don't know. I think for a bullish setup, it's not the best, but guys, it's fucking cabal cash. I mean, I'm gonna take some of these YOLO trades, but it's 20 bucks. If I lose, 22 bucks. Here's one I put on today. ZTO. It's the same idea. Credit spread. I think it's a bull put spread. I think this is a good example. Is this a so bullish trade. So guys, the coolest things I like to play, I think if you're just very new, look for this pattern. Look for just bull flags. Because that's what I showed you, mRNA. If you just jumped in this stream, I showed you mRNA, how I bought here at 30, and saw what happened next. INSG, I bought here. First daily candle to make a new high, sold up here. So it sells. You wait for the top, it pulls back. First daily candle to make a new high, you get in. So it's that simple. Or if you don't like to wait for the confirmation, you can just get in at the support. You can say, oh, it's hit low. This is an insight candle with a higher low. You could have gotten in here if that's your strategy. Although, I mean, you see this higher volume here. Wouldn't have been the best candle, but regardless. So that's what I'm doing now in this one. On ZTO. Soul J Landing says he's banking on SPCE stock, been watching them for a week. Nah, that's a good stock. I had a paper trade on them not long ago, a spread. We'll look at them next. But this is the ZTO I have. This is there's some time I have in this one too. When does this one expire? May 15th. So I think this is gonna break 3171 by May 15th. So it's definitely asking for too much, especially if there's a pullback. But it hit all-time highs, and it has an ATR of $1, and we have like, you know, 18 days left. I think that's kind of a lot of time because this can come with a little bit of news. Bam, $32. I might even sell a little early. But again, I'm thinking a little bit more, trades that aren't the best in this account. A better trade would have been, look at this pullback. Maybe not this one because this is way overextended, but this is a little more choppy one. For example, this is the first day candle making a new high, but you see how it's doing this. You want like a good looking one. This one still caught in here. Maybe this. It's first candle making a new high, breaking above. You bought here at 25. You see where it is now. So yeah, there's some choppiness out of it, but that's the thing with the options. Like the options weather the choppiness. If you have stock, you bought stock at 25.52. The next day you see it. What if you get stopped out at 24.50? That's $1 a share. You're just down. Sure, you're still above here. Sure, you probably should have had your max loss down here, honestly, but that's still too far away. And I don't know. It's just with options, it's much easier to manage your risk. Let's look at space. Space is space. Virgin Galactic Holdings. Pump. Obviously, another federal government pump and dump. See, pump and dumps are not restricted to smaller price stocks. I'm telling you that. Well, first off, this stock used to be $6. I mean, this was a smaller price stock. Let's see the float on this. I mean, if you look at the float, it's higher. You see institutions owned. It just shows who's doing this, guys. But this thing's moving like a small cap. Look, 81. This is a higher float. Higher float. 3.89 billion, guys. That's what I'm saying. You look at the market cap. It's not just a bunch of retail traders doing this. This is from the you-know-who's, the Freemasons, the Catholic Church, their space program, NASA, the big banks. They're doing all this. Sure, retail traders are jumping behind them too, but no, with a market cap of 3 or 4 billion and almost 100 million shares in circulation, I don't think it's just a bunch of retail traders. All the retail traders are buying up here. At high of 42.49, Freemason 42, Scottish 49. Seeing these numbers on the space program stock, not surprised. Not surprised. I do not think this high is coincidental. I think the AI algorithm. And again, how does this high happen? The powers that be who control the shit has a large sell order at that price. That's all they did. They had a large sell order at that price. Some sucker bought some of the shares, but the offer kept stacking super heavy probably, and they couldn't break it, and that's the high. That's all they have to do. I mean, again, it's not hard to manipulate the market at all to the penny. We've seen them do it again and again. So now space, and I had a spread here too. Another example of where this. So I've already fell for this, and I've learned my lesson with mRNA. On these crazy mover stocks, I don't think you should buy spread. I think you should get straight up long calls. You're out the money, in the money, just long calls or puts. Because you just get the whole move. So yeah, I bought like at this break of this. I bought this break of here, and then this happened. But you see how I didn't care about the propaganda that's caused this? I just was playing the pattern. And then they gave you propaganda to make this happen. All by the numbers, of course, too. So now look at it. It's trying to channel above. This is what we saw. This is exactly what we're seeing on we already saw this pattern earlier on the one stock I have the trade on. Where I have the butterfly on this the Bank of America. No, it's not Bank of America. Well, I'm not gonna remember which one it is because there's so many different ones. Oh, it is. It's the same. It's because it's an XLF pattern, the financial sector pattern. See, it's doing the same thing, channeling up here until this 50 SMA. But space SPCE theirs look better because one, they're above the longer term moving average. This looks way better. This looks like a good neutral trade. You see, again, this is what we're talking about earlier. All these things I was teaching about, you see here in the stock here. It's around these 3 moving averages, and it's consolidating here, and it's been doing it for the past 2 months. Honestly, I don't want to. It's too late, and it's kind of what I was saying on my Bank of America one. I think the one that's breaking out. It's like if you see a range, it's probably too late by the time you've noticed it. That's why it's good to get in like here, because you're like, okay, I did it once. It's probably gonna like get rejected up here. Let me target like hell here or anywhere around here. You know what I mean? Sure, by this expiration you have closed here, but if this is your range, you have made a little bit of money, or you have just broken even. You wouldn't have lost, because you will lose if you're probably above here. You'll probably give yourself above here. It's just perfect, because you see how this gaps down, this recovers, this overhead here. These people are these bag holders. These bag holders need to get out later on. You see, the bag holders are getting out here. That's why you couldn't break there again. So that's why when you're making your range trade, you see this, you'd want your range to be in above this. And this gets, you can see some penny stocks, any sort of low cap stock, anything like this type of candle is where people are going short. It's where you just can't expect a rip past, and when you do, it's going to be a short squeeze, and you're going to see an explosive move probably back up this way. So that's why if you're bullish on SPCE, the level to look at is here. If there was even more volume in this day, it'd have more credence. But you want to look at a break of this and then reclaim of this, and then slowly, you're gonna have more problems up here though. Once we get back up to $27, we're gonna have more problems recovering through this. I think it's gonna come up to here, and it may even coast here for like a while. And that's the thing, when SPCE, I'll send an alert when it comes to here, because as I said, forget it. I don't even remember this shit. Let's see 2650. That's a little early, but when it's at 2650, 27 area, I'll see what it's doing. And I'll probably put on like a butterfly spread, like some neutral strategy, because it's going to consolidate around the area for some time and maybe sell off a little bit. So it's going to recover here, and so yeah, I'm so bullish for this. That's what I'm saying, because I think this range that is in is over. Like it's channeling up. It's gonna retest this and probably go. And again, their earnings are gonna come out. They're probably gonna be good. How did know they're gonna be good? I don't. It's contrived bullshit crap. I don't know. In 5, 20, there's a lot of earnings that day too. Let's see if these. Let's see. Oh my goodness. They were 50 numerology, 30. Yo, Saturn 30. Let's do SPCE, Virgin Galactic, SPCE 43 like Masonic. Look at these pandemic numbers too. And it's interesting how they run right before the pandemic. See? February, then the pandemic comes, then they bam. Could be coincidental, but Virgin. See how Virgin and SPCE both equal 43? It's by the numbers, guys. These people run the show, the Masonic Freemasons. So we can see from Richard Branson's birthday to earnings. I've done this before with Netflix earnings. That's like the one I've done. I've done Netflix earnings, the birthday of the guy. I was like, oh, this is negative. They're gonna have a sell-off, and their earnings were bad, and they sold. This was like years ago. I didn't trade. I didn't have money then to do anything. But July 18th is 187. Ancient accepted Scottish Rite of Freemasonry, Society of Jesus birthday. So let's do May 5th to July 18th. 74 days from his birthday. Unbelievable. I mean, his earnings 74 days from birthday. That's how this is rigged as fuck. I mean, come on. 74 days from his upcoming birthday is when earnings is. He's 69 years old. But the thing is, I don't know, killing 74, death 213, 2 months, 13 days, could be bad earnings. But I've seen this go both ways. That's the thing is, but it's about doing it a bunch. What if, right? What if, because it's all about knowing the probability. If you know that 60% of the times, 2 months and 13 days from the CEO's birthday, it's bad earnings, that's odds in your favor. You know what I mean? Or if you know it doesn't matter if you know it's 33% of the time. You just know the risk-reward ratio you can put under a trade. That's why it's important to know to do this. That's why it doesn't matter if you're wrong. So if their earnings are good, you can't say this is bullshit, because what if the 10 other times it worked? That's what it's all about. So this is really interesting. 2 months, 13 days. I can't wait to see what happens. If they're bad earnings and that stock dips, you heard it here. You can even buy these $10, or maybe not 10, maybe like, what options do these people have? You got weeklies too. Nice. I'd probably get the May 8th. Like, no, I wouldn't. Well, it depends. If you think they're gonna, you could actually, because they're gonna be really cheap and they can get in the money really quickly. Like if you think they're gonna be bad earnings this day on May 5th, you get the May 8th, and you buy like what you think it's gonna go to. I don't even know when it's gonna go to. I mean, I think it's gonna at least retest its lows and maybe break lower if they're really really bad, or get saved by this. So maybe buy like the. Here's just the thing, like if you want some nice percent gain, here's the trick. So let's just say we buy the 13s for. Let's say we bought the ass for 40 cents, and their stock tanks by $4 to $9. That's 1,000% return. You see that? Or 100% return. The math can do the math right now, but it's whatever it is. It's 40 cents, and it becomes worth $4.40 or whatever. If it goes to 9, I mean that's down here, but their earnings could be that bad. They could literally have earnings saying, "Hey, fuck, actually we did nothing. You need a shower." Well, would be nice. Virgin Mary 57. Could see them have some stuff on 57 too. I'm gonna mark that down here. Virgin Mary 57. So Virgin Galactic could have a ritual participating on the 7th. Believe in a life 666. On the 7th, Virgin will rise just before Facebook falls. Right? Can't wait. I just can't wait to see these rituals to play out. It'll be very interesting. So yeah, this is on my watch list now, as my mental watch list, as in like this alert's all I need. It's gonna fire off. I'll be like, oh, okay, cool, and I'll do my thing. I kind of want to see what their earnings are gonna be like too, though. I don't feel like playing this earnings though. I could. I think it's because what would I buy? I don't think it's going to 9. I think if it's bad, I 11. I mean, it's gonna retest one of these lows. Maybe even okay. But how much do the 10s cost or the 11s? That's the most out of my. The 11s. See, this is actually not bad. The 11s, you can get a 1,000% return on these, because you can get the 11s for like 12 cents, and then the stock goes to 10. That's $1 in the money, because it just needs to go to. This needs to sell off to 86 or 1088. If you get them for 12 cents to be in the money. I'll show you in the graph. I might get them. I mean, guys, it's fuck. Why not? That's what I'm saying. I mean, come on. That's why I love this. How cool is that? It's like, I think, Death 213. These are bad numbers. They can have bad earnings. I can risk $12 on that, and if I lose, lose $12. Okay, but if I'm right, I can make like 100. Let's see. So here's this May 8th. So let's move this to, so May 8th is expiration. But we're gonna put it. I mean, you could hold this to May 8th, and because it could start selling off, and then because again, it could happen. Shit might not happen. You want to give some days anyway. So May 8th probably are the. Yeah. So it needs to hit 11. You'll hear 80 something for us to make money. So if it's at $10 by expiration, we make $94 if it sells off to 10. And can it sell off to 10? I mean, you can. It's a big sell-off, but see, it's tested. It's hit it before. But I think I think their earnings are gonna be good. I think that the 213 is priced some other riddle. I mean, that's the thing. But for $12, is it worth a shot in a Robinhood account where I'm playing with their money, or it's my money that they're giving back to me? But you know what I mean? Sure. Because again, guys, I'm not risking my entire account. I'm not blowing it up. I'm not having more of a 20% drawdown. So I don't care if I lose this trade. It does not matter to me. I mean, make this $12 back. We can make this back twice, winning one credit spread, where we spend 25 to make 25, or even when we spend 30 to make 20, which has way higher odds to win. And but anyway, I'm gonna move this step to the earnings date, but it doesn't really matter. So on the date of earnings, let's say even sell us to 12. We're making more than what we put in. See what I'm saying? If you think they're gonna go up, you can also buy, I think, an out the money call option. I think this costs a bit more. That's the only thing. You know what I mean? Like, where are you gonna buy? That's that cheap. The $35 call. No, I don't think they're earning that earnings. Well, I mean, who am I to talk? Yes, it can actually go to $35. You could buy one of each. You could buy a 35 out the money, May 8th, $35 call, and it can retest as high as a 42 by 8th, and you'd be super duper in the money. Or, and the thing is, I might do it. I might honestly do it. It's in my risk tolerance. It's 3% of my account most for buying one of each. It's pretty much a straddle. I don't even know, but it's gonna happen. Hell, let's just do it now. Why am I talking about it? Here's Robinhood. I'm gonna queue up the order. Might not get filled overnight, but let's see. By overnight is when the market opens, it might not get filled. So let's trade options. Facts, yep. And that's what's trading's fun, If you just come in with like, I don't know what's gonna happen, I don't care what's gonna happen, I'm just gonna manage my risk and have fun, and trade my plan my trade, and then you're gonna have a good time. I'm not getting emotional. I'm probably not gonna win any of these. Their earnings probably gonna do anything. They'll probably be bullshit. The stock's probably not gonna move. I'm probably gonna lose in both of these. But again, it's a logical. This thing is a history of making crazy moves. We know that this day's, some death, killing numbers from his birthday. It's also a span of 75 from his birthday. Scottish Rite 75, which could also help setting it up. It could be a good day. So let's go this May 8th. Let's buy these. Or let's buy the put first, because I know what I want in that put. See, I might buy the $12 put though, because it's even closer. The 11, yeah, I might buy this $12 put, because then if it sells, we'll make even more money when it goes to 10 anyway, and it's still not too far from our risk. So I'll buy that, and then. Where's that out the money call? The $35 call. Oh my god. See, I don't know if I want to go that high, but I might just say fuck it. Oh my goodness. It's gonna be. I'm not spending more than that. Again, I'm keeping my risk low. I don't give a shit because it's probably not gonna fucking work. It's not gonna work. $12 put, $35 call on May 8th. If you can see what that looks like real quick too. But the whole thing, I'm spending like $40. I have a good feeling about this. So I think it's gonna make some crazy move. And even if it doesn't hit it, one of these might be worth something. They might be worth a little bit more than what they are now. It's not the dumbest trade I've done. I've done way dumber trades. I have a good feeling about this one. I like this one. So what's this $12? Oh, it's a $12 put, yeah. And I'm buying the 35 call. Jesus. And then get rid of one of these. What is this one? Oh, the 11.5 put. See, that's annoying. Real quick. Here we go. See what this looks like. Yeah, so I'm probably calling this the wrong thing, but it's a form of it's a straddle, but it's just so cheap and it's so out the money, but it's SPCE, so that's why it's just justified. But realistically, it could just. Here's the thing, though. I'm expecting it to run I would hold this. I would hold this to expiration because at the calls, because it's gonna run for some. I want it to run for some days. If it's really gonna, if that call becomes in the money, I mean, I'm gonna have to shit run and retest the highs and maybe make higher highs. If it came to that, yeah, this is looking good. So I'll continue. That's the price I want for him. That call too. I'm probably not gonna get filled in the call. The put probably. I'm more cool with that anyway. This is probably not gonna work. I don't even like doing. I've never even done a strangle before. I've done paper trade. I paper traded it once and it didn't even work. I don't even like this. The call ratio back spread is better, but I'm looking at it as I'm just buying two very out the money options that are really cheap and that could easily get in the money based on information I saw. So I'll leave it there in terms of SPCE trade. But I'm gonna show you a better trade to put on because this is that's not the type of trade I even like to put on. I'm trying a trade that's. I'm gonna put another bullish trade. I think that's what people need to see. I need more of those anyway. So again, financial sector. It looks like they're recovering slightly, but not really. I want one that's been just doing good. We know technology's been fine, but it's kind of more so been sideways. You can see in the past week it hasn't been going up that much, nor in the past month. I think services was the one. I know someone mentioned that earlier. I think Jared mentioned that earlier, and I was looking at it earlier myself. So let's look for a services trade that will probably give us this money back. Let's try to make back this $40 that I probably just wasted on out the money SPCE calls and puts. But you know, a couple winning credit spreads will get that back, or I can even find one. So my hope is to find a credit spread and enter it like here at this type of area versus here, saying that as in I want to spend 10 to make 40 and it'll actually work. That's kind of my goal here. So let's look at this. Services. I look at I just like to do optional shorter bull because some of these you can't, there's no options on them. For price, I'll do like between $5 and $50 because I'm using a small count. And then average volume, this is so important. I do over 1 million because I hate these illiquid options. It's just, yeah, just if you see a illiquid option, if you know how to trade them, sure, but I don't know how to trade them, and they're just so hard to get filled on. You end up just losing money trading them. That's where the bid and ask spread are just so wide. Like a liquid bid ask spread is like, I mean, there's some, not this. This is a pretty liquid option, but like, oh god, I don't even know. I can't even think of it right now. I don't even know. Maybe some Pinterest options. Like, this is a bad example. I'm glad. It's hard for me to find an example. Well, we'll find one later because one of these will be very liquid. Even with 1 million shares traded. So pretty much I'm just finding like, I already tried to do it in technical. I'm looking for like different patterns. Oh, I do above 50 SMA because you know it's trading up then. But again, now like before it would have been easy because it would be something like this. But now it's like everything's like recovering. You know what I mean? AOBC looks alright, but I think that has illiquid options. That's a good example. Hey, look at this shit. 30 by 70. I mean, it's like, okay, so right now it's at 981, and these are the in the money or not the in the money, the at the money options. Look at the at the money call options at 950. If I wanted to buy between that, so you'd have to buy it for 70 or between 70 and 30 cents. Like where you can get filled at. You want to get filled at 30, you buy it for 30, but that's what everyone's trying to do. So maybe you can buy it at 50. That's right in between. But then when you're trying to sell it, it's just, you know what I mean? Because when you buy it, you're going to have to sell it for profit, and the spread's going to be big as well. You're just going to lose money. Versus earlier, we were seeing spreads are like cents, pennies apart. So that's why I wouldn't want to trade this thing. It's just, yeah, like 15 cents by $1.80 for a $9 call. Like, what do you do? How do you buy that? How do you sell it? So you just pass. But that's the cool thing with options. You just pass half of these. Here's big lots. I think these are pretty liquid. I saw this earlier today. I wanted to short this, and I couldn't because I couldn't get a good price. but I wanted to because of this. I mean, it's perfect. I'm still gonna short it. I'm probably just gonna do a bit longer term bearish trade on it, not just a short term credit spread. Because look at it's just so picture perfect. Big Lots is a shitty fucking company. It's a shit store. They have good stuff, good deals, but like it's a shit company. Look at this major gap down. Again, it filled its gap. Look how long it took to fill this gap. That whole overhead stuff, that's what I'm talking about. All these bag holders, all this volume. Look how long it took them. Look how long. Like 3 months, 2 months, to finally, and they did it with like a gap up and like a rally that they didn't even fill it completely, and they got faked out over this 180 SMA just to roll back over. This is what I think the market's trying to do right now, is this type of shit. You see these traps, just trapping these people. Again, don't invest in big lots. That's the whole point of what I'm trying to say. Sure, back here you could have invested, but since February of 2018, no. And now you see every time it taps here. So who are we? Are we arrogant enough to say that this is the point where all of a sudden, and think with coronavirus happening, who's going to Big Lots? Maybe BigLots.com, but who the fuck goes to BigLots.com? It's like there's no fundamental reason. I don't even use fundamentals. I just use straight up technicals. I see how this is being faked at this 180 SMA. It's going to turn over again, do the same fucking thing, go back down to 10, which means I'm. This is how I'm going to trade my Robinhood account. I'm going to buy a $15. I'll figure out. Well, I'm going to buy an out the money put option that's really cheap. That's like 2 months out. And just buy it, and this Robinhood account, hold it, and it'll be in the money soon, and then I can make a shit ton of money off of it. That's the plan. That's what we're gonna. This is our next trade. Big Lots. I want to put on a spread, but guys, these are some really good. Well, I'm saying that SPCE was. I don't even know why I took that trade, but I did. I liked it. I'm not gonna not take it. I think it could work. A COVID vaccine, a financial joke, tax hike, all 666. Nice. August 3rd, 888. Says ESP power. 666 equals 18 divided by 888 equals oil. Or, no, 666 equals 18, as in 6 plus 6 plus 6. 888, 8 plus 8 plus 8 is 24. 24 is a call to Kobe virgin daughter. Man, that really could just be I mean, I don't know. They could be tying that in too. We'll see what they do on 5/7. But here's Big Lots. So let's look at what we can buy here. Trade big options. I like how they call them that. Big options. By the big nose, who's running Big Lots. Trapping all the investors in by the numbers. So we're going out to July. And I'm just looking for prices. Ooh, oh my god, this is actually not bad. I might play this in my other account. I'll buy it tomorrow. It's just like, again, these 1250s, sure. I might buy these 1250s. Or these 10s even. Only reason I wouldn't buy the 10s, because that's the previous low. Like, this would have to sell all the way back down until July. Let's see what's even after that, man. I'm going to give it some time. October. Man. But then you see, these are more expensive. And you see that price jumped? Because this is the time value. That's all this is extrinsic value. It's time value. With options, you're buying and selling time, essentially. So we're going farther out. These are more expensive now. And it's like, you know what I mean? Sure, it's still not a bad deal. But because, like, for example, you can get the 15s for $1.38. So then once it's like 14, 60 something, you're in the money. You're break even. So, you're still making a bunch of money as it's selling off. But again, this is my small Robinhood account. I just can't afford that. So I'm not going to do it. The best I would probably do is buy this 1250. Where is that? That's so down here though, man. Oh my goodness. It's almost like I want to see if this like opens up and actually tries to because it could do this, you see? It could do this. I would love it to do this and then buy it. It'll be even cheaper. Like it could just do some sort of fake, even to like $24, $25. I don't know. Let's see that before we make the decision. It's just because that 1250, that's July. It's like out here. Let's see. Like even this whole shape took like several months. You know, it takes several months. The sell off this doesn't take that long. Yeah, the sell off the SMA doesn't take long at all, which is good. Which is really good. Yeah, I don't know. I just think it's a long ways to go. I'll think about it. I think I'll waste so much stream time just thinking about it. I'll have to sleep on it. It's not like I don't want to do it. I just feel like it's just so far away. Maybe the 15s, but again, I might put this on my other account because that makes way more sense. The 15s so you know it makes way more sense. So I'll put the 15s on my other account. So let's move on to the next trade. I'll put an alert in big lots though. Let's remember. Let's see if we can make any hires. All right. I don't know why. How did I even get the big lots? I was supposed to be in. Oh, this is services. That's right. This is services. Chegg. Ooh, this is fucking education stuff. You see the move already happened, but there's gonna be continuation, especially because they're saying that people are gonna be in school all throughout the year. Schools are gonna be closed. What if they say? Oh, schools are gonna be closed throughout 2021 as well. Chegg's is gonna go even higher. So Chegg's definitely a bullish trade I want to play. Only thing is I really want to pull back. I hate it over like this is just again either a pullback. Why are you scratching me? Damn it! Either a pullback, and then like and actually shows it wants to come up here. I mean, it's been the same. Oh, this is big lots again. Oh my goodness. Chegg, CHEG. Where are they? CHGG. Here we go. So you see this here. It's like it's a silver extended. It's making some sort of trend line with this. I want some sort of pullback. Like if I got in here and it went up higher and most of probably retest these highs, yeah, $45. That's actually not bad. But no, I'd rather wait for a pullback to even like here. Maybe to the 20. Like the 20 is gonna catch up. This will pull back to the 20, and then it'll start treading on the 20, like it's doing back here. And as it's doing that, the 50 and the 180 actually try to flatten out, and then before you know it, checks it's on an uptrend again. So this just needs some time. I just feel like it's just the risk reward is just not there. Like I would love to take it here, like this would have been an entry for me. First day kind of making a new high over the SMA again. I mean, it popped over the 180 SMA. It retested it. It tried again. It broke over, increasing volume. This would have been an entry candle, and look where it's at now. This would have been a long calls. Would have been good to buy here, but I probably would have honestly done a credit spread. I could just see I've seen this. I've just probably done I was sold the 40, bought the 36, 37 or something, in my bigger account. With this Robinhood, I would have sold the at the money. Bull put or bear. I was sold the at the money bull put spread, and still made money on it. So I'm seeing where this is at. This looks like a good shortable though. Only thing is I'm really trying to stay away from shorting these. Pretty much being a reversal trade. I mean, I don't want to be a reversal trader. I want to see this, and it's gonna have shorting this, trading credit spreads in this, bear call spreads in this every single time. I already have some of these on, and they're working. But let's see what. Oh, May 15th. See if this had weeklies. If this is May 15th, no, because by May 15th it could easily sell off and make higher highs. So no, I'm not gonna counter trend trade. I don't recommend you do it either unless you know what you're doing. So we'll wait for this. I guess I should keep notes. Let me open the notepad or something. CHGG. Wait for pullback. And then there's a big lots. Just give it time. Yes, I don't remember. I'll look at it again. Remember, I just want to wait. Oh, and by 15 July, put in other account. Yeah. Puppet Show 666, Peace on Earth 666, Clown Show. Yep, this is a definite clown show. An illusion. Enemy of Man. You guys have some good 666s going on. Alright, let's look for something. I just want like a nice, like this. Chewy. There we go. I know this has been running. Oh man. See, I feel like I always miss these entries, but it's whatever. It'll pull back. Yeah, I really want to enter these credit spreads, because I'm trying to do a bull put spread. I want to enter it on a candle like this down candle, to get as much credit as I possibly can out of it. So I really want this to sell off to like down here again, right? I just hate how long this has been going. I'm like, dude, this is probably it needs to pull back to the 20. I'm really trying to get my risk reward really good. You know what I mean? Again, why? How nice would it have been to get in here or here or here, even here? This candle right here, this nice igniting candle with all this volume on the 8th. Let's see what Chewy equals. Chewy is run by the you-know-who's. Come on, don't even deny it. Chewy, CHWY 49 like Scottish. Let's make sure I'm spelling him right. Chewy Inc. Chewy 2864. See how Chewy has a 1771 like CDC? That CDC pattern. What Chewy's trending now during this whole thing. And look what they did today. Up 4%. Is there news? Because I know Dr. Savage told me today to look out for CDC stuff. And with the connection. Because the 27th of the day was 71 numerology. Today, now the 28th is 72. I just want to see that news, though. Oh, is it over here? There's a bar you can open. I feel like I'm wasting time looking for this. I'll show sidebars. Live news. Nope, no news for Chewy today. Okay. It's worth checking. I mean, could have been completely by the numbers. So I'll wait for a pullback on this one too. I have to. I mean, this does look like it's setting up for an ascending triangle, flat top breakout here, essentially, to break a 477.55. I've played this before too, and it does work over a longer term. Like if I had a spread that expired the 15th, these are all-time highs too. These are all-time highs at 47.55. Things at all-time highs are good because again, it goes to say, you can't sit there and be like you're calling the all-time high. That's how I won on this INSG. Because this was at all-time highs back here. I said, okay, this is all-time highs, but what I bought during a pullback, and then I bought on the first candle making a new high. So this is what I'm trying to do on Chewy. You know what I mean? Right now, Chewy is up here. I'm not trying to buy Chewy when it's already done its move. I want to pull back and get back in. But and you see how this was kind of a double top break of highs. So getting here this is a good entry if you're really bullish. This is not a bad entry in a sense. It's just again, I think it could be much better. This thing could pull back. It could go. I think the thing's gonna still move though. But again, I just want to take my money. But Chewy, I'm looking for a break at 47, maybe the 50, maybe. Let's see if we can do an out the money. We could do an out the money. But even if I did an out the money credit spread, I want a pullback. But maybe I should be a stickler. Maybe we can get in now before this thing just gaps up. Let's see what we can do with this. I'm probably not gonna put this trade on because I don't like where it's at. I like how this made a new high than all these, and it's really close to this. That's what I like. Like it's very bullish. Tomorrow really could break this and go over. And I do want to play this breakout because if it breaks that, it's probably gonna go to 50 before it pull back. It's very possible. Oh, you're welcome, Forever Awake. Oh, you're talking, you're talking to Eddie. Yeah, you're some good stuff. COVID, grave, match. Wow, that's what it does. It sends you to your grave. Mentally, it's mainly COVID, grave, perfect match. Wow. I have the Tiger 888. Oh, nice smoke time. Peace, man. Yeah, I'm gonna be done here shortly. I have no clue what time it is. I purposely didn't check the time, but I know if once it's, I must check the time and see it is. Oh, 1:38. Yeah, maybe. I don't know. I get up late now. I don't work earlys anymore. So, and it's you guys are lucky, man. I have no reason to go to bed right now. So, guess we're gonna keep going. I got put on some trades anyway. Guys, essentially, I could put on all these trades. They could all lose. I could lose everything. That's okay. I'm having fun. Chewy, let's see. Because again, the more trades I put on, maybe you'll maybe learn how to put them on as I'm doing them. So I'm saying this is 47. I think it's gonna go to 50. Like how much would a 47, 50, like buy the 47, sell the 50s? Ooh. Oh, this is a yeah bull call spread though. Spending $90 to make like 200 something. Oh, but look at the expiration date. You wouldn't do it, mate. It's right. That's not gonna happen by Friday. It could. Oh, it could. It easily could. But it's like why? Why not give yourself more time and not like just be fucked? Because they think could pull back the next few days and it's not going anywhere. Oh, thanks ESP. I'm glad you like my streams. Yeah, I hope that you'll show this, gives people some ideas, just entertain them. We can all just look at the market together, all these companies. Now you see. Now you guys know how to find the strong ones. This is clearly a strong company, and we found it with the scanner. We looked at services. We found all the volume, everything. So this is a hot stock right now. But just because it's a hot stock doesn't mean it's a good time to buy. Again, we said the better time to buy is maybe during a pullback. I better yet a pullback to the 20 or a break at this high right here, break at 47.55. I do not think it's gonna be a false breakout either. I think it's gonna actually be a real breakout. Could I be wrong? No, but it looks good. The volume's picking back up right now. So I gotta put this trade on. Maybe, but I'm probably not gonna do it. So May 15th, no. Actually, yeah, by May 15th, I think I can actually do it. Look at the ATR is the average true range. It's how much the stock moves in a day. So 3.17. So it moves about $3 in a day. My target is $4 from here. So May 15th should be good. Even with the pullbacks, you know what I mean? I don't know what's this, but this is thing of weeklies. If it has weeklies, it might even go out a little bit. It does. May 22nd honestly sounds better. I rather give myself a little bit more time and just take it off early. May 22nd. I mean, I can't put this on my Robinhood. I already know I can't. So, let's see. Buy this. Oh, that's selling. Buying. 47. And the 50. So, I'm spending 125 to make like 200 something. But maybe that's a bigger trade for my other account. So what I would do here, and then I would just I would buy the 47, or sorry, I would do a credit spread because again, this is my Robinhood account. I'm trying to keep it small. I'm doing credit spreads on these bullish things. I like selling options. I like the fact that I just like it. I don't keep losing my spot. So we're gonna sell the 47 put, or excuse me, we're gonna buy the 47 put and sell the 50. No, Jesus, I'm confusing myself because 50 was my target. So we're trying to go to 50, right? But the thing is, we're not trying to capture all that move. We're just trying to make money off the fact that it's doing that. Because again, it's these small base hits. I never really said. I think you guys got the point. If we're taking these small little trades with these small risks but decent gains, and they have a high chance of hitting, if you just do that enough, and you make money. I mean, just 4 of these trades where you make $25, you need 4 of them, make 100. You know, and you lose 2 of them, okay, you're still up $50. If you lose 3 of them, you're still up 25. You know, you're still making money. So you don't have to be right all the time. So I hate how Robinhood switches this shit up when you click buy or sell. It just makes no fucking sense. So this is a spend 30 to make 20. And it makes sense like this. That's why I wanted to wait for a pullback. So why is it spend 30 to make 20? Because we are buying this $47 put contract to cover us selling this 47.5 put. Why are we selling the 47.5 put? Because where's the price? 47.5 is this breakout spot. So it literally just needs to break out and hold it. But the thing is, we're just playing the breakout and the hold. The thing is, honestly, this thing is weekly. If we're just doing that, I think I like these credit spreads in shorter time frames because again, it could break 50, right? If we're the 20 seconds, it could easily pull back to the 50. The market could turn over, or the market or everything can open up. They open up everywhere. No one needs chewy online shit anymore, you know. Then their shit sells off. So it's like I think that time frame was just too far out. Now that I think about it. So and that's why like I'm showing in the Robinhood. But what I usually do is I make the trade in here first. I look at I think it through. I look at the risk graph. So it helps me visualize it. I don't do it for every trade, but I put it in here first and think about it. Then I just punch it in here and go. You know what I mean? So I like the trade, just not May 22nd. I like a May 1st, honestly. No, not May 1st. May 8th. I kind of do like May 1st. I like May 1st, so that's why I'm confused. Remember, I was like, our $50 is our target. Yes, on a larger scale, but I'm just trying to do a credit spread that's at the money, or a little bit out the money. We don't need to get $50. We just need the shit to keep going up. So, I might just do May 8th. Again, I'm just afraid of a pullback, man. I'm afraid I'm gonna do it now. That's why I'm probably not gonna put the trade on. I might even put it on tomorrow, but again, why? I hate the risk reward for that. It was risk 30 to make 20, which for high probability is not bad, but I wouldn't call it high probability. This thing could pull back and waste our time. It can grind more until May 1st, then it'll finally break out the next week. I've been there before where the move you wanted is like the day after it expires or 2 days. So I'm going to sit on this. I'm going to play this, but I'd rather wait for a pullback because putting a trade on now just doesn't make sense. And if I even went more out the money, like, what's the point? You know, there's just no point. I'd rather put this on during the day tomorrow. That's what I'm trying to say. I'd rather wait during the day and it actually gets up here. It actually breaks 47.50, honestly, and then I'll figure it out there. You know what I mean? Let it do something. I just don't like this now because then it can break 47.50 and I can play the next leg up, and then actually have one that's in my favor, risk reward wise. Because I still think it's going to 50. So we gotta go to the next one. Caesar's Entertainment. Again, it's like places are closed. You know, it's just, I'm looking at it this way. Why would this thing keep trending up? Who's going to Caesar's? Besides the you-know-who's who run this place. All by the code. Guys, no one's there. That's shut down. Is Nevada opening up soon? I mean, I hate to do this. I like to just look straight at the price action, but again, it's just to show you guys, because I know a lot of you guys like the fundamentals too. I just don't like fundamentals. I could care less what these people are doing, what their company's doing when they're opening up. Let's look at Nevada stay at home or something. When are they opening up? Weight gain, that's by the numbers. Of course, it gives all this propaganda. This is all from the governor's birthday. Whatever he did this. Governor Sisolak. What a fucking actor. Steve Sisolak. Jordan Governor Steve Sisolak issued a statewide stay-at-home order for Nevada's 3 million residents Wednesday, joining 33 other states. See? This guy had that 33. I mean, because you see how we're looking at this, we're actually trying to find information. I'm glad you're saying this. Because I've said this before. I've tried to just look at the propaganda for actual things, and it's just by the numbers. I mean, so for those who are saying, we look for things, we try to look for patterns, how are we looking for anything? I'm literally trying to see maybe when they're reopening. We're researching stocks. And here it gets this 33 right in this Masonic propaganda. In Carson City, CC 33 with these military man with the head in hand. I mean, what is this shit? It's from the fucking Freemasons. Joining 30 now it's 37 other states. Virus 37. Unbelievable. This stuff is stupid. Of course, Nevada with the 47 gematria. It's this guy showing us how to predict the system and make money. Because if it ain't green, it ain't important. I was pretty much have been showing you. I've been showing you how you can use technical analysis to predict where the market goes, and that's probably the better thing to do. I've shown you how they do things by the numbers. Again, a lot of things are after the fact, but you have to look at luck and coffee. I mean, I think it's a good example. You can't say this is not by the numbers. You can't say that from their IPO to this day, which is a span of 47 weeks, or excuse me, 46 weeks, Chaos 46, Sacrifice 46, Virus 46 is a Chinese coffee stock, happened during the time of this coronavirus. 46 weeks later, there's some bad news with like the legal issues with the saying they're fabricating transactions, which is why I said way back here where they IPO'd. That's how you predict it. But again, it's so for a fact that's what happens. The whole thing is how do you find the next one? Well, we were looking at Facebook. You're here late. You're here late, but the Facebook we're looking at May 8th, Facebook 58, and how we're even trying to construct a trade. How you can do you can do a straddle, a strangle, or more importantly, a better one, a ratio back spread to play in any direction. So if it goes all the way up here, you're making money. If it goes all the way down here, you're making money. But if it sits around here, you lose money, but you don't lose that much. Yeah, this is only week 1, but I exposed truth numerically. Gambling 65, maybe they open May 6th. Wow, interesting. May 6th. They might have some news. Look, it's right before their earnings. It's right before their earnings. Just like we saw Pinterest 5445, 5/4, but their earnings is the next day, 5/5. Gambling 56. Now their earnings is 5/11 the day after. I mean, we're seeing that again. I don't know if this is really a thing. So they have the propaganda news shit coming out that day, and then the earnings the next day. I don't know. But that's very interesting. We're seeing that pattern right here. But yeah, if you want to predict this, again, this is gonna sit around here for some time. It might even end its earnings. I think. I wish this thing had weeklies. Oh, it does. Wow. But their earnings are the 7th. See, that's how they do it. Their earnings are the 7th. I could though. I might do that. Put on a butterfly on this, or some sort of neutral strategy to capture the fact that it might consolidate around here for some time, and just take it off before their earnings. Take it off even before the 6th. Take it off on the 5th. Like, not gambling 56, just hold it to the 5th. Still get that. The thing is, I don't want a butterfly, because a butterfly, you get most of your money those last 3 days. So I don't want a butterfly spread that expires May 8th, and I'm closing out the 5th. I know I just don't like that idea. It's like, man, you literally get most of your money because that time decay, those last 2 days, you're making all that theta decay is what you're profiting off of. And if you're taking your trade off before then, you're leaving so much money on the table. That's why I'd rather just do a credit spread. I'd rather honestly short this. I'd rather do a bear call spread on this shit right now. That's exactly where, and we're putting this on a route. This is happening right now. I don't give a fuck. The spreads will have to be so high, but it's weeklies, so I don't think so. Let's see this shit. It's at 924, but here's my idea. I'm gonna do an at the money because it's right here. I don't think it's gonna go any higher. I mean, it's gonna fill. Why would it fill this gap? Why would it fill this gap? This place is not even fucking open. I mean, it's just literally who's pumping this shit up for no reason. So, high is 930. This is about to be a juicy trade. We're putting this on. I love cheap stocks, so I'm really excited about this one. So let's see. Very, very simple. Oh, and they're $50 width or 50-cent widths. Oh my goodness. I'm gonna trade the fuck out of this. I already know. I'm gonna trade the shit out of this through the fret. I like it. It's cheap. It's liquid. The spreads are good. So let's see this. It's at 9:30. So I'm gonna. Let's see. Where's $9? Ooh. Sell the $9 call. I'm holding this shit past earnings, man. I don't even know. Or maybe no. I'll get the. Let's see. I'm just trying to figure out the expiration. I'm just get the May 8th. Fuck it. Why go past earnings? Get the May 8th. Here we go. No wonder. Okay. Sell the nines. Buy the 9.5s. Well, that's $10. See, I'm risking 50 to make. I'm risking 40 to make 10. I don't like that. Unless I can get filled in between. That's all I can do. See, that's what I'm saying. For this small count, that's all I'm doing. So you could do a bigger spread, but you see it. If I sold the nines and bought the tens to cover myself, my max. This is like $100 width, so I need $100 of collateral. I like these. These are really nice when you can spend 20 to make 80. So I look for these, but when it's in your favor that way, you can spend like 30 to make. And I have some of these going on. You spend 30 to make 70. 25 to make 75. Like, that's what I have. So that's not what this is. So when it's not my when the odds are in my favor that way, then I'll move to a debit spread where you just pay up front and put it on, and it's nice because you don't have to put collateral on. And I might just have to sell the $9 and buy the 950s. Wait, let's see this. See, that's what I'm saying. This is a good example where Robinhood is good, but like you can't analyze the trades that way. You have to do it on your head. Like, I'm not trying to think it all through. You know what I mean? I like to just put it in here and it shows you. Like, I can think it. I can do it on paper. I can do it with a calculator. But it's late at night. I just don't want to. So we'll just put it on here and see what's gonna happen. So I'm gonna put it in Robinhood, right? But we're gonna analyze it here. But I'm putting this trade on. I don't care what it is. I'm trading this setup. I don't give a fuck. This is a good stock to trade. What is this? Are these really the spreads? Jesus, I thought the spreads were better than this. The only spread that's actually decent is the $9 call. That's it. So if I sold it, that's all. Cause I'm not gonna buy it. I'm not buying a fucking $9 call on this piece of shit. If I sold it, I'd buy the 950. You see what I'm saying? It's just, ooh. But I can get, so what's going to happen? Here's what's going to happen. I can get filled in between. I'm going to put the trade on. I just might not get filled. That's probably what's going to happen for something like this. I probably won't get filled. So I'm going to spend 27 to make 23. I'm going to adjust it and spend 25 to make 25. That's just like, that's my minimum. That's what I always do. I won't. Maybe I'll wiggle and, I'll do this, spend 24, make 26. But the thing is, if I set it and forget it, and what will help me is if Caesars actually goes higher, that's what's going to help me. If Caesars opens up, especially in the morning, it just gets pumped in the morning a little bit just to sell off the rest of the day. Just that little pump might even help me get filled. So we're putting that on, but it's going to be, we're going to do it. So we're going to sell the nines, buy the 950s, and we're going to get paid 25 cents for it and hopefully get filled, but probably not. That's okay. That's that's what you get when you play with these low price stocks, but some of them are pretty good. Some are pretty good. Of course, Robinhood. See, that's how they do it. Oh yeah, we're gonna make sure that we're not gonna suggest that you can get filled in between. They'll tell you here. But so many people, oh cool, that's all I could do. It's like no. And again, it's not bad. It's a high probability for it to sell off. So like some of you are thinking, oh, I take that. I'm just not comfortable with it because one, if I lose, again, it's like, why would I spend? I don't know. You're literally risking $40 to make 10. That does not sit well with me. That means you need to do that trade 4 times to like make, you know what I mean? It just makes no sense to me when there's way better trades you can put on. So 25 is the best I do. Sure, I can do 30, but I mean, if $10 is the best to do it, I mean, 25 is even begging for a lot. So getting 30 cents from it, 35 is just being too greedy. But if it starts pushing up in the morning, I mean, I'll put alerts down. I'll put alerts on. If it starts pushing up, squeezing up, just, I don't know, some fake news or something, yeah, I'll take off my trade and I'll put a new one in. Assume if it didn't fill already. See if this thing's gonna make higher highs. If it does, then I'll see if I can get more money out of it. See, credit or debit. And this is good. This is a teaching lesson. Are you expecting to receive a credit or pay a debit for this option? You'll get a credit if the options that you're selling are worth more than the ones that you're buying. And that is because I'm selling the premium on this $9 call and I'm buying one that's even more out the money at $9.50. And I'm doing it to cover myself, again, in case the price keeps going up. I can cover myself with that $9.50 call. So I select credit. Again, I don't know why they do that. They should assume, they should already know what you want. Again, I think they did to confuse people. They want the noob to just click the wrong thing and then just get fucked. So that probably won't fill, but at least it's placed. Move on. eBay. I looked at them, but again, it's just like, what am I gonna do? Short up here, sure. But again, I don't want to do that. It's so tempting to see all these setups and just short everything. Sure, I just short a strength, but why not short? Honestly, like the financial side, like why not short a sector that's literally shitty, but it's just having a rally? You know what I mean? It's just like people are like short covering right now, and then you short into that. But just like, it's just I already have some. I just think it's a bad habit. I think I'm gonna do it and just fuck myself over one day, even if it works now. One day, I'm just gonna fuck myself over. Like even fat, yeah, of course I want to short this, but maybe not. It's like my brain wants to, but this is the wrong sector to do it. Or I'm looking for bullish trades. I still haven't found one yet. Well, I did, but it wasn't Hain. This looks alright. What's Hain? It looks like liquid. As it looks like it won't have much activity in our options. This breakout's looking sick though. Robinhood looks a lot better on desktop than mobile for sure. Yeah, Robinhood desktop's legit. I like this. It's fucking awesome. They did a good job. And I like how I haven't fucked with it yet, but since it's on desktop, you can expect the element. See, I don't know if they didn't put class names. I was trying to find a way to like, extract this information. But maybe if I looked at it better, I could. I don't know. It's for another day. But Hain probably has no liquidity in their options though. But it's looking good. Look, this man, new highs today. New high. This is the nice breakout, high base breakout of all this. Look, even back here. So it's a multi-month, and this is This is a pre-coronavirus high too, a pre-coronavirus high. So it means these guys are doing something. They're providing food on some level during this coronavirus thing. Like they're profiting off it in some way. They're doing well. Their earnings are coming up. Maybe the earnings will even send them even higher. So this looks like a setup to even get in on a breakout trade, hold through earnings in hopes that it'll be a catalyst to send the shit to even higher. That's an idea, but I'm really trying to be concerned. I would love to, guys. If I can only take trades at the moving averages and just play like the bounces of them, I would, because it's just so low risk, high reward. Again, I want to find stocks that are just like in this type of thing, just in some sort of trend that's set it. Even this doesn't trend that nicely. Like, man, I hate how this shit does stuff. This would have been nice, but now it's still looking fine. Actually, it's looking really strong. But I'm talking all this stuff. Look at the options. Probably suck. Oh man, these are fucking awful. I've seen a lot worse. But again, like, the spreads are just shit, man. Like 50 cents. Again, I've bought these. These are on my tolerance. Like what am I gonna do on this? That's what I'm trying to think. sell the 28s. I think I'd rather wait for a pullback, especially this doji right here. I'm gonna wait. I'm gonna wait on this. This is gonna go on my notepad. I think if I just actually, just like was patient on some of these, it'd just be better. It's whatever. I didn't have much hopes in that one anyway. There's gotta be something. Here's Kroger. I already played this one. Just had bad timing on it. And the spread was so bad, I had a fucking $35 put because I couldn't. I had to get assigned shares off. I had to let it expire and get assigned shares because the spreads were so bad. But then I sold it at 32, so I made like. But plus the premium, I mean, this thing I don't know. I thought Kroger's options would be more liquid, but after that, I honestly don't even want to trade this shit anymore. And I also don't like where it's at in the chart. And again, you think when's it gonna get back up to 36? It's gonna have to grind up there, and there's gonna be a lot of bag holders on the way. There's just way better stocks right now. I think Kroger's already made its move. QGen. This thing could easily make higher highs. What's this? Services, research services. Kiagen. I don't even know. Therascreen test for cancer. The scientists who made a homebrew coronavirus test. What's it? Oh, look. See how it's in quotes? That means there's gematria behind that. Behind homebrew. Homebrew. Please don't. I hope this does not fit the pattern, but it's probably going to. Ha! Virus 89, 37 like homebrew. You see that shit? I mean, again, we're just here trying to find legit information on these stocks, and we're getting this coded nonsense along the way. Homebrew 89, 37 like virus. And what are they talking about? From BBC, see from BBC, the 223 network, the scientists who made a homebrew coronavirus test. I mean, it's just by the numbers bullshit propaganda with the black and red Jesuit order colors. This is the Francis Crick Institute. So, but here talk. Oh, the firms that manufacture and sell them is Kiagen. So Kiagen manufactures these tests. So that means these people are relevant. And again, but you see how I don't need to read the news. This is why I don't care about the news, what they have to say. Why do I have to read this when I saw on the chart that this is clearly a good, not Hain, but wait, whatever. Yeah, but you can just tell. Yeah, QIA. QGN, I mean. I could tell this is good. I was like, okay. So do you see why looking at a chart saves you so much effort and time? You don't have to go through the propaganda and figure out if a company is good or not. I don't need them to tell me that these people are making coronavirus. I don't need them to tell me anything. I don't have to know what these people make, what they do. It helps know what sector they're in. You can follow the money that way. That's really all I care about, what sector it's in. I like to know the float in the market cap just to get an idea of how it moves. But, other than that, it doesn't matter. It's clearly a company that's doing something good. Look at this huge sell-off. I don't know how this happened. December 24th. Sold off from 41 to 32. And again, imagine if you bought. You see, I'm here telling you about these out-the-money options, how they're, long shots are crazy. But look, what if you say, I'm just going to buy a $36, because that's what I've maybe done. Buy it around this SMA for it to break or something. That's what I was talking about earlier. Buying that $36 out the money put option that's expiring really soon. That thing would have been worth like 10, 20 cents, right? And now look, this goes down low, close at 30. You have made oh my God, thousands of percent. That's how that works. It's getting these out the money options, and then these crazy moves happen, and then they become in the money just like that. So you paid nothing for them. You pay 20 cents for them. Now they're worth $8, and that's what this was. And this thing filled this gap pretty nicely. So you could have just done another one. Oh, let's buy another. And that's what I would do. Of course, it's hindsight, but we see how it's done this. So if this company does this shit again, you bet I'm going to buy out the money fucking calls and puts in this thing. But this thing is trending up, so I'm gonna wait for the first daily candle to make a new high and enter in on a 42, or maybe even See, I hate how this volume here, these red volumes, are like as much as this. Because this could still be consolidating just for another sell back to this. So let me wait for a little bit more confirmation. We're so close. High of this is 4170. So 4171. Just we know I made a new high. Once it does, we'll see. These are not illiquid either. Good. Sell the 42. Oh, the puts fucking are though. Wow. Oh my god. Yeah, I guess I should look here first. Oh, let's see this then. What if we bought a 42, sold a 43 for May 18th, $35? That's not bad. This is not bad. This is not a bad out the money trade. So we're spending 35 to make 65, and it needs to get to, for us to make 65, it needs to get to $43 by May 16th. For us to break even, it has to get to our lower strike plus the debit paid, how much we're paying for it. So we're paying $35 for this. Our lower strike is 42. We bought the $42 call. We're selling the 43. See that? If you sold something higher out, now it's gonna cost. It's even more. But it has to hit this for for you to get your profit. But here's what I like to do. I see you at 43. By the time of expiration, if we went to 43, we still have like $65. So I like to make these wide debit spreads, because you still pay the same amount of money. Oh wait, you don't. Well, you can sometimes, but this lock fucks me up. See, it's supposed to be more. It's supposed to be more. There we go. But sometimes overall, still because sometimes you can make it wider and you're paying barely anymore, and it's like in your favor. So 45 is too much money for us to spend. So this dollar strike is better. Again, it's more probable. You just make less money. So if the stock goes to 50, 60, 70, 100, you don't make any more money. That's what you have to understand. You cap your gains. You see this? Some of you might not like this. They can shoot the 140. You're not making any more money. But that's okay, because you have to be realistic. This thing's not going to 140. If it does, go trade small cap stock. Go trade penny stocks. Those things make sick moves every day. If you're trying to get crazy moves, you shouldn't be trading this stock anyway. So I'm thinking it's going to go to, 42 is here. It just needs to go to 42 for me to be in the money, and you go up here. This is by May 15th. This is not out the question. It's not out the question. With an ATR of 91 cents, that's not the question. I might do it. I'm probably going to do it. I just don't like how it's $35. I'm really trying to stick to trades that are like 25 at most. And especially just to make 65, I don't know. If it was 35 to make 100 or something like that, sure. So what I will do is I might wait for a pullback, just because again. Or no, that's right. I already said I'm gonna wait for this trigger. I would like a pullback, but if it makes the first daily candle make a new high, it's more, because look at this high. That's already at 42.21, so it's gonna easily be in that money and make it even higher. And you want to go higher, because what if it goes to like 44, 48, right? 46. Okay, well it's gonna pull back. That means when it pulls back, it may pull back to 43 by expiration, and I'll still be all in the money, get everything. So I'm not gonna put that in Robinhood yet, because I'm waiting for the trigger, so I'll put it in tomorrow. But I have this trigger. So what's gonna happen is this alert's gonna happen when it happens, and I'll just put it in on my phone. So that's a good trade. I like that. Services, QSR. Ojin looks like a pump move. I'm looking at KMPH too. Yeah, it's Ojin. I know that one. Wait. I've traded this one before. This is definitely a pump and dump. But we're looking at QGen is the one we're looking. This also, it does look like a pump move as well too, though. Ojin and QGen are both pumpy looking stocks. But KMPH, that sounds familiar too. Oh, Chem Farm Inc. Ooh, nice. See, history of good moves, guys. These stocks are great, guys. All the penny stocks are bad. Okay, the only thing with penny stocks I hate is like reading the level two on them is more difficult because there's just more shares, so the level two is thicker, and they move in four decimal increments. Notice that it's like 28.59. So like reading the level two is just a different like animal. You can learn it, you can be good at it, and you can buy these at obvious points. And so like I've made money off these cheaper stocks. And look at it. Look at how now it's recovering over the 50. And if it pulls back, especially in holds, this might be a good investment. Investment, because it's still a shit. Guys, you have to understand, it's a shit company. That's why it's reverse splitting. Actually, that's why it's reverse splitting. Or I don't think it's thing reverse split. I think this company just sucks. And their earnings are bad every single time. But this needs some. That's what they need. Some coronavirus propaganda, and then they're good. And this thing can go to $1 higher. Look, back here, this thing is at 47 cents. This thing can easily make it to $1 again. Let's look at the float though. That's one thing you want to know. KMPH. See, the float's a little bit higher though. The market cap's low though. 16 million. I like that, but the float's too high. I would love a reverse split. If this company reverse splits, I am having on watch, because a reverse split means that they consolidate the shares into one. So we'll say that right now it's at 29 cents. Let's say it's at 29 cents, right? A 10-to-1 reverse split means that for every 10 shares you had, you now have one. So a 10 it'll be times 10. So it'll become $2.90 per share, and you have 10 shares less, or divided by that, or 100 to 1. I think I might be explaining the ratios wrong, but that's essentially how it works. So they'll do a reverse split. Their stock price will actually be at like the $2-3 range, and then they'll release news saying, oh, we got coronavirus, this or that, this new approval or something, and then their stock will take off. Only thing is, it won't take off that well because the float is too high. Like 50 million, there's just a lot of shares. If it was like 10 million, 15 million, then I'd say, cool. Can this thing still get news? And so what I think is going to happen, this thing's going to have some news soon still, and you'll see this thing soar to the touch this, or maybe retest 48. It's in a good spot. I really think this thing can get pumped and retest this 48 level over time. I don't know when. Maybe their earnings on May 12th. This might be the time to load up before earnings. And you might be like, it's cheap. Here's the thing, is it's cheap, but like your stop should be like the low of this, I think. If it goes, because the low is 18 cents. So it's 10 cents below. So you can get 100 shares right now. It's actually not a bad trade, because you're risking like $10 to make pretty much $200 if you think about it. Because, or I'm probably doing this wrong. No, I'm not. No, sorry, you're risking. Well, let's do this. So you buy 100 shares. It's not much money. You go up to 18, you lose $10. It goes up to, if it doubles, you make 20. Because this doubles, you're pretty much getting 20 cents. But the whole point is, this is a big far move from it. That's the thing with these penny stocks. You think it's 10 cents, but it's like a large percent of the move. 69% from that's the top though. Let's just say 28 to 18. That's 58%. Right? That's a really good move. But what if that's to the downside? What if you put $100 in it and you held it off there? You lost $50. But you have to look at the risk reward. If your target's here, you're risking 58% to make 63%. So it's not even 2 to 1. But this is resistance, but it can easily break this with enough news and propaganda. I think the highest it goes up here. Maybe 64%. If it retests these highs. Oh wait, am I reading this wrong? I swear, I had this thing drawn wrong. That's 159%. Okay, I was right. Yeah, so you'd have to hope for it to go up here for it to, and you know what I mean. It's still looking good though. It's long story short. It's looking good. I like where it's at. They said news on new ADHD drug waiting for an FDA. See, they're waiting on FDA approval, which I think the FDA is going to approve it. Guys, I really think the FDA, they take a position in a lot of these stocks. Why wouldn't they? I mean, come on. You think they're not? They fucking are. The FDA, they take a position in these stocks before they approve them. I mean, you gotta be fucking retarded not to. You know they fucking do. They take a position in these stocks, they approve them, and then they write them up. If not them, some of their cronies, their agents, their family members. So yeah, there's probably people loading the boat. Me, am I gonna buy up here? No, I'd probably like to buy it at a pullback. Just because it's such a cheap. I mean, because I don't want to buy here and it goes down, and it's like I'm already down like 10%. I mean, I would place for small share size, of course, but still, the FDA approval could be. I don't know. Maybe they could use their bad earnings to. That's what they're probably been doing. Going to use their bad earnings to take back all the shares and then pump it up with the FDA approval. That's something that just people like to do. Oh, no problem. I'm glad, bro. I love sharing this, teaching this. Giving my opinion. Of course, I hope you guys all know everything I say could be wrong, bullshit, but it's just what I think. Like, this thing could completely tank. KMPH could tank this fucking 5 cents tomorrow. Oh, never mind, we're not going to do this anymore. Or it actually works, it gets pumped, and then as soon as it gets pumped, they announce a secondary offering, and then they just scam everyone else again, and then the price goes back down. I mean, all these things can still happen. All right, Aid. This is a fun style. This thing likes to move. This thing likes to fucking move really nicely. I can't wait for its next pump. I'm ready. I'm actually ready for it because I know this thing's to move. I'm just waiting for like it to break this trend here, but I'm not gonna put any options on it or anything like that. I want a nice uptrend that's just good, like SMF. This is what I want. No stupid resistance, nothing to get in the way. Just something that goes up. But this I can already tell. This very liquid options. I don't think I'll be trading this. It's okay. It's okay. Yeah, I mean, has no options. I mean, look at that. You can just look at the chart, so nasty. You can just tell. Shit, no fucking options. I thought I selected optionable and shortable. I guess I didn't. I did. Okay, well now we know that this isn't perfect then. And yeah, some of these charts look so bad. Overstock. Uh, that's just a big pumping up to me, guys. I'm sorry. Their stock's always just doing these crazy things, and it's just like now, like I mean, there's so many bag holders in it. Like, where is this gonna go? I just think I don't know where it's gonna go. Go up, down. Just hard to see. See all these, it makes me want to short them, but it's like again, I'd rather find this pattern in a weak sector than just short it there. I'm looking for a strong uptrend like this, SMF. I'm looking for this in the services sector. TSG, I like this. This is good. This is really good. Have I seen better? Yeah, but this is cool. This is have options to trade? Probably not. Liquid, so probably won't be able to trade it anyway. What's this? Oh, jeez, this is fucking awful. Oh my god. I mean, look at this in the money put option. Look at the spread on it. This is stupid. Oh my god. It's okay. These are weaker. These are smaller companies. They don't have much going on. Like, they don't. It's normal. It's just fine. It just sucks when you see like a cool pattern you want to play and there's no options that are liquid enough to play it. But again, that's how I manage my risk. That's how I don't take all these trades anyway, and blow myself up. VIPs. What's this? VIP Shop Holdings. See, this is what I like. This choppy shit, choppy bull flag. That means that when it goes up, this thing can rip to 20. This is something I want to buy a long call for. Remember how I was talking about earlier? This is it. I am not gonna fund a spread. If I do, I'll put a spread around Robinhood account, but my other account I'm putting on a long call. If I can, this is gonna retest the highs. I like this. I love these type of charts. Big sell-offs, big pumps up, just fucking crazy pumps. This thing loves. What is this? This company's crazy. VIP shop. You guys have never heard of this stuff. Ooh, it looked first. Like, look at this entry. You guys, look what we found. This is what I'm saying. Just a bullish trade on the moving averages. This is, guys. My last two trades to put on this, I won. When I back test this pattern, I win. When I love this pattern, it's just because when you think of a stock chart, this is what you think of, just up, 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 down, always going up. So it's going up. It's sold off violently to this. We can even you get half this. We can get something. This is a credit spread. Oh my goodness. Please have options like a trade. Oh, and they're weekly. Oh my god, this is amazing. And they're weeklies. That means they're gonna be liquid enough. They should be at least. Oh my goodness. I wish I saw this earlier. Let's see. I might put this 3-day one on. I don't give a fuck. Holy shit. I am excited about this one. Sell the 17s, buy the 1750s. Let's see. Or the other way around, I mean. Or no, that way, yeah. Sell the 17s. Yeah, it's a 15. I just hate the risk reward, but again, it's like maybe I can get a dip and get filled better. Or again, I know some buy long calls in this. I'm gonna buy, because what if I buy a long call? Wait. I could buy $17 long call. Let's see what the calls are later on, like May 15th. Yeah. And my other account, I'm probably gonna buy a $17 long call. Honestly, that's pretty worth it for like 80 something cents, like $80. Once it breaks 18, it gets to 20. If it gets to 20, it's $200. So I'm spending pretty much 80 cents to make $2. So I'm putting on my notes first off, and then but we're gonna figure out a Robinhood trade for this because this is such a good setup. It's going on both accounts. Fuck. But that number, by the way, you saw that's from some guy in the chat, not this chat, but like Zach's chat. He was giving it to everyone, so that's a public number. So I didn't. That was no one's personal information that wasn't meant to be seen. Yeah, long call. Let's put that down in the notes. All right, we're going back to see what we're gonna put on those. This is awesome. You saw IBIO today, missed the pump and close. Yeah, man, that's how it goes, man. Sometimes those things, but it's just hit or miss because sometimes it can also sell off and fade all day. Like me, I sold my INSG today. That could have kept going at the close. It really could because it was holding 14 all day. But it's like, when you're up, especially in the morning, man, no problem. Because the thing is, if you're doing that consistently, you're just gonna make money. Over time. Sure, like if you're selling your winners too soon all the time, and you're literally saying like every single time you can see how you can make so much more money, there's something you can work on. You know what I mean? But you'll find that a lot of times you do sell the top, or you do sell when it's best. And I think that's kind of what it's about. Just like as long as you're locking in some good profits and they're bigger than your losers. And that's why for anyone watching, that's why I'm trying to size these. That's why I'm not trying to make 15 cents, but risk 35. Because again, it's like my losers just are bigger than my winners. I just don't like that. So we're finding something else to do. We're gonna do something with this Robinhood account with this though. There's gonna be something. It's gonna be probably something more off the money, honestly. It might even be like later, like a month out. Because this thing's just gonna keep going. I mean, I think this thing's gonna go even higher and higher and higher to maybe. The thing is, I hate this though. This high at 19 back here. That's what it already ran into. That's the problem. It could have already run into this, and this could be the top for a long time. Only thing is, it looks like it wants us to like actually give it a shot again. So, this is why a long call. So I like to buy long calls at this point. See back here. This is a perfect example. You see why I'd rather buy a long call back here on the left than over here, because there's resistance. Like your upside's going to be capped by this most likely. Of course you can break out, but then even then your next level is this overhead. This 22, 22. You know what I mean? Versus playing a long call back here when there's just nothing but blue skies. You know, hitting all time highs and stuff. You know, you just hold it, hold it, hold it until just maybe hold it until like here. It just makes more sense when there's not past resistance. But even then, I'm playing this move right here, and I think a long call's still good for that. But let's see. I'm just doing a little bit more analysis real quick, and we'll be done with this particular trade. Because the 20s, they sell for like something. But it's like, okay, I know what I'm going to have to do. So I'm not going to go this far out. We're going to do May 8th on this one. Because this thing's about to move. This thing moves quickly, too. It moves quickly. There's no point going that far out. Hell, I even tempted to do this. Yeah, let's see May 8th. Might get more time in this. Let me try buying this. Here we go. So that's what I was trying to say earlier. So when you do a credit spread and it's like the risk reward is in your favor, I've noticed if you flip it around to a debit spread, then it becomes like better. So now I'm gonna spend 20 to make 50. Just if it just goes up by the 8th. I'm probably gonna put this on my Robinhood account, honestly. It's not gonna be the big move, and it's something that is I would love to place. But again, on my other account, I'm gonna try to get the bigger move. So this one is good for Robinhood. I'm just thinking it through. Oh, because so one thing's important: a debit spread and a credit spread, at expiration, they're the exact same thing too. That's one big thing you gotta know. They're the exact same thing at the expiration. That's why ultimates doesn't matter too. Look, I'll switch. If you switch these or whatever, it'll be the same. I don't think it's. Yeah, because they're tied together, but it's the same. This is a credit spread. The graph looks exactly the same. So I'm spending 20 to make 30, and this thing needs to just be above 720 for me to break even. So I just asked myself, will this be above 720 by like the 8th? Possibly not, because it could easily go up here and consolidate. So I think the 15th is better, but I might change this. Let's see. See, now it's 45. Let's see. Let's see. See, it's now 45 to make 5 because I put a timeout. And it's more probable. Again, the more you put things in your favor probability-wise, the worse the payout is. It's no different. Like, they use the same model for this stuff as they use in sports betting and stuff. It's like the Black-Scholes model. It's either the same or similar model. So yeah, if it's not the same, it's, the same concept, though. So, but it helps me pick these trades up better. It's like, if this loses, I'm not going to be like, oh, if only, I did May 15th. Well, no, because if I did May 15th, you saw the risk reward. It's shit. This is actually what's better. And what's even better, honestly, is this. Spend 15 to make 35, but you want to find that happy medium. Why spend 15 to make 35 when it's like, I think I have a better chance spending 20 to make 30? $5 difference, but it's way more in my favor. What I'm hoping for is an explosive move up here. That's what I'm hoping for. And that's why I'm playing another account. I wanted to retest this and even get stuck around here and maybe sell off a bit. But by the time it gets to May 15th, we're going to still be above. These will both be in the money. And you see what happens? So I switch it to a bull put spread. See how the graph looks the same at expiration pretty much? So we're selling the put, the upper strike, we're buying. This is the credit spread. We're gonna. This makes no sense. Well, this goes back. See, it's backwards too. It's a bad way to explain it, but with this graph, but essentially, That's the rule of thumb. If the shit's not in your favor, switch from credit to debit or vice versa. You might get something. So we're putting this on right now. We're gonna buy the 17, sell the 17 and a half calls in Robinhood. What stock is this? Vips. Check out Mercado Libre, the Argentine company inked in the USA. It's catching fire, but it's expensive already. Yeah, we'll check that out for sure. I'll put this trade in and we'll check that out. So we're gonna buy this 17, sell the 17.5, expiring May 8th. Where the hell is? No. I refuse to believe this is happening right now. Oh, it's a CZR. Thank God. I was like, no. You're telling me that the options aren't even here. Wait, this is even worse? Is Vips not even on Robinhood? Oh my God. These are freaking me out right now. I can see that. I've seen stocks not on Robinhood before. Now I think they've gotten better. I've seen everything on here, but before they wouldn't have half the shit sometimes. Buy. So. No, I'm not gonna get 15. Oh wait, I'm gonna pay 15. Yeah, I'll pay 15 to possibly make. Yes. I'll put this in. I mean, I might not get filled. But yeah, I mean, I'm not gonna put in 25 and get filled in the ask either. 15 is actually fine. That's worth it. Cause I can adjust it in the morning. You know what I mean? I could, after trading in the morning, working stuff. I could just, if it hasn't gotten filled, I can then adjust it to 20. And if I didn't get filled off that, it's not a big deal. I'll find something else to trade. So this sounds better. I spent 15. And you can come back here, you can change how much you're gonna pay to 15. So I was paying 15 to make 35. But I still get this May 8th expiration. It's possible. Let's do this. If Robinhood says they can do it for me, then I doubt it, but it's very, very possible. Okay, good. Perfect. And I could have even done 2 of those, because but the thing is, the way I see it, if I can spend 15, even less than 2% of my account, that's good. Because if I lose, that's less lost. If this doesn't work, I lost $15. You know what I mean? That's good. Really good risk reward. So let's move on. And again, what are we playing? This bull flag. Sure, the self is a lot. Some heavy red volume. But again, we just need to get up here. We need to just go up here and chill halfway. By the 8th. That's not asking for too much, man. I think it's fine. What the worst that can happen is it can pull down to because that could easily happen. It can pull down to the 50. See how it's been pulling down to 50? You can pull down to the 50. This can be a false breakout, a false whatever confirmation. It pulls down to the 50 by the 8th. And then we're fucked. And even then, if it's pulling to the 50 by the 8th around here, I don't think by the 15th it's gonna have come back up here. It could. But, I don't care to go out to the 15th just for that to happen. Yeah, so this is not perfect, but it's pretty good. I really like that one. So good. And that's it, see? We looked at all the services. This is easy. I mean, you only have 2 pages of shit to look at. I mean, half the shit I didn't like. ZTO, already have ZTO on. That's how I found this trade earlier today in my portfolio. That ZTO trade, I did the same thing earlier today. Look at services, see? I saw this type of pattern I'm looking for. There's a constant uptrend, no bullshit, and I put a spread on it. And if you do enough of these, you will be profitable. I might try. I hate making guarantees and saying because I'm not making guarantees, and I'm not trying to tell you what to do, but it's just a straight up bull flagging pattern, constant uptrend. Because you have to ask yourself, man, what if you're playing that from October at Vips, from October all the way through January, man? You could have been doing this the whole time and been making money. And it's pretty much still doing that, just in a different fashion. It's just going up and up and up. So we can't be ignorant and arrogant and think that we know all, and we just can call that it's just going to tank now. If it tanks to $12, then it does. And guess what? Since we're treating option spreads, we don't lose any more money than we already would. We're going to lose $15 is the most we're going to lose, or $20 if I change it up. And $25 is the most I'm going to go. I might do $25. That's the highest I'll do, though, for a 1-to-1. 1 to 1. 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 1 to So yeah, WWE. Look at that. Speaking of Trump and all the bullshitters, this looks shortable though. I'm not gonna lie. I really want to do it. I want to short the fuck out of this. Again, it's an overall pattern though. I mean, look, boom, up here, down, up, down, up, down, up. It gapped up though, and it sold off. So I want to find a bottom here. See, this looks like even a neutral trade to put on. I hate these ones that are floating in the middle of the air. I love doing things by moving averages because that's where stocks like to hang out, by the moving averages. So if I expect this to be neutral for some time, I like to be neutral around a moving average. You know what I mean? Like if it's gonna consolidate up here, how long is that gonna be for? You know what I mean? They don't have weeklies. You would think WDBE might have them. So I don't think it's gonna. I don't think it's gonna consolidate like this all the way into May 15th. I do not see that happening at all. If it does, then it does, and I missed out on it. But I'm contemplating because remember I was saying that if you already see the range, you've already missed it. This is where you want to start looking for range trades because it's just starting. You know what I mean? So maybe if the next candle, if this is all happening down here, if WWE did not gap up, and it was maybe a few days earlier, I'd probably put on a neutral trade on this right now. If it was like still down here, but it was down here in this neutral territory and it just gapped up. This is probably one of the bad things you don't want because remember you see how this is neutral. Only thing is these are coming together. These moving averages, they're converging, and that's probably what made people want to do something here. And their earnings, of course, that was the main thing. I didn't see the earnings were good during all this coronavirus time too. Look at that. What are the odds? Yeah, Mercado Libre. If I check this out again, Mercado Libre. Because now we go to some bearish trades, anyways. Bearish neutral. I might even be done after this. Because I feel like we've been going for a while, but we'll see. Libre. Mercado Libre. I might even take it. What time is it? Yeah, I might take a little break or something. I think if I had a hard cutoff, I'm trying to think. Maybe 4 o'clock. I might not go that long, but it can't be past 4 because then that's where my sleeping is like fucked up. So I might be done at 3:30, maybe even at 3. We'll see. But traded on Nasdaq, it's Melly. See this? See this chart? See? You guys saw this? It's a chart I like. Sure, this portion of it is not good. It's like, but it looks like it wants to correct itself and start again. But overall, you see, the whole thing I'm teaching was from March 28th, 2016, guys. It's been bull flagging from until 18. Sometimes for years, guys, for years. You're sitting here just playing this thing, up, up, up. Sure, you're gonna get fucked. But when it's doing this, you probably want to be bearish. Like once it gaps down, opens under this 50, or once it just gaps down, you don't need these moving averages. You see how it gaps down? It tries to retest and close this gap. It can't. This next candle makes a new low. You want to be bearish. You'd be bearish for like a week or two. See, so that what if you did a bear call spread here? You sell, the 170 calls, buy the 170.5. Week, look, you're in the money. See, you won, made money. That's the whole point. Like you know the obvious move that's gonna happen here, and you play that. You hold it for like a week, and you make money. And then maybe you just don't play this week or something. Switch because earnings. You skip this, and it does this again. And you see this again. You just do it again. You do it again. Bounces off to the 20. See, new candle make it first. Daily candle make it new low. After that, you go short. You have made money. Doesn't matter what strategy you did at this point, unless you did a neutral strategy. Any bearish strategy you have made. Credit spread, how targeted butterfly at the SMA. Remember I said you can make those bet trades? You can just pin a butterfly down here and say, okay, if it hits this price by this date, well, seeing that this is by here, you could have done that. I know it's all hindsight again, but knowing how these all act with each other, these moving averages and the price action and the volume and everything, you can predict in a way where things are going to go. So it just sucks now. It's coronavirus time, guys. It's really made the market is in a different way. Like we're still waiting. Like it's like this looks like it wants to definitely correct itself and start going up. This looks really good. I really appreciate this call out. Thanks, Eddie, for this. Because I'm probably going to trade this. I don't know how. This looks really expensive. Holy shit. I just realized the price. This is a really good stock. Really good. No wonder it's doing this. It's a good company. Argentine company. Catching fire. Definitely catching fire. So, all this expensive? They say, well, if it's options, couldn't you trade options? Because it's, you need less capital? Yes. And I mean, that's what I'm saying. In this Robinhood account, no. I don't think, I mean, you gotta look at the options. Look at the spreads or the spreads of the strike prices. They're $5. So when stocks at this price range are $5 width. So, it's the same thing. Do you know how I'm risking like $25 to make 50? It's the same probability for this. So you'd be risking $250 to make 500. You see what I'm saying? It's the same thing, but that just means you need more money to do that type of thing. I can't spend $25 to make 50 on this. I don't know how it'll happen. Or did I say 25 to make 50? I meant 25 to make 25. Because it's a 50 cent. The width of those strikes were 50 cents. These are $5. So the expensive makes a difference. I'm going back to Robinhood and show you like these trades I have on. So you can, they're all 50-cent width spread. That's $1. This one dollar. This one's $1 too. ZTO. But both of these are good. These are ones I'm spending $25 to make $75. So those are good. This one I spent $15 to make $85. So yeah, well, I try to go for 50-cent spreads, 50-cent spreads. So you can see how $50 is like the what's what I'm working with there. Here is $500. I mean, you see, let's do a quick one. And look at the spreads in here are pretty big because it's a higher price stock. It's just a whole different breed. You know what I mean? But the chart's worth looking at. It's worth knowing that things exist. One day I'll have more money. I'll have a bigger account. I can trade something like this. Yeah, it's expensive. That's a good sign. I mean, it means they're doing well. I'd rather see an expensive stock, good company, doing well, good for them. It's good. There's just so many cheap stocks out there that make even bigger moves than this. This from, this is what, a 54% move, which is good. But I mean, small cap stocks, they make this type of move every day. They make the type of move in minutes, in hours. And, so capturing a move like this with a small amount of money is possible for people like us. Again, I'll show you THMO. That's a recent one. There's so many. THMO. There's MDGS. This one opened at 236, had high of 342. I mean, look at the percent of this. In one day, 48%. In one day. We're talking about that thing doing that in months. This thing's making 50% move in one day. The next day, look at the move. Look at the range of this. See? This one's 47%. I think I did this one wrong then. I swear. You have to have it straight for it to work. This is 94%. So you have a 94, so almost 100% move in one day. The next day it's 50% move. Could you have captured the whole move? No, but could you have captured 2% of it? Yes. Like on this day, I captured like a couple percent of this move. I mean, but yeah, you're capturing 2% of something. You're capturing a little bit. It's better than nothing. So. So yeah, so looking for like a bearish trade, it's just the same thing. Yeah, I'm probably gonna. I mean, I think I play some trades. I'm probably gonna wrap up at 3, just so I can actually go to bed. I think we've shown a lot, and I'll probably stream this again at some point, because I think we've gone through a lot of different things. So yeah, I'll probably stop this at 3. But let's look for some bearish trades. So what do we do again? We go to the groups. We find the weakest sectors now. Remember, we're looking at services because services is strong. The past month, it's been pretty good. Past week, it's been all right. Past week, past day, it's not the strongest, but again, I think so. Past month's been good. We've seen a lot of those charts. We just see how services you just think about it, it's good. And again, you have to be careful for financial. This is a rally. Like it's a sector that's not been doing too good. Could it be the reversal? Could it be actually the reversal for it? Yeah, of course, but we don't know. So I think another weak sector that I like is industrial goods. Not really actually, because I don't like how it did the past week. Again, I'm doing short-term stuff. So if I'm doing like a week or two out, I don't want to really go into things that the past week has been doing good. Because I'm like, if it's been good this past week, it's good next week. So utilities, I've been ignoring this just because it did so well before, and I don't know. I think it's too late to say that it's been pulling back. Let me look at utilities. I have not. I've looked at other sectors. I have not looked at them for a bearish trade. Let's see. But the thing is, I don't know. I think I, with those coronavirus stuff going on, it didn't seem much like a candidate for me. But that's where the money's going. The money's not going here that much. So here, and I mean, that's why this is the secret. You see how the per month. This is the thing I really want to show everyone. These are the best stocks and utilities. You see how the past week this was up 9%, 5%, 24%. These are all. So this means that if a stock's doing good in the past month, it's most likely going to do good work week per week. That's what it means. So you want to find the hottest ones for the month. So I'm trying to find the weakest ones for the month. And now you look at this. See, these weakest ones for the month, most of them did pretty bad this past week. You see that? So it's really all about going to find the sector, finding the month gainers or losers, and that's where you are. And what sector to go to depends on where the money's going in. And better yet, again, I think it's good to learn how to read the charts. So you can, XLK, you can see, okay, this is technology. Technology is doing this well versus financial sector, which is not doing this well. So you can know why would you want to be bullish in financial versus in technology. It's very, very cut and dry that way. You want to look from the market, the sector, and then the stocks. So we know what the market's doing. We see what the sectors are doing. Now we're going to look at the stocks. So we look at the worst stocks. This will change. I forgot to do this. See if I can go back to what I had before. I don't want to put all this shit back in. Whatever. So price again, 5 to 50. Maybe let me do one. Let me just do anything, just because we can find some $3 stocks that might just be recovering that you actually can do some nice option plays for. I mean, who knows? Average volume over 1 million, and then utilities. Okay. Optionable, shortable. So this thing, and this is why I didn't like utilities. Even in some of these really weak, like, the worst month performers are only a few of them. Because utilities, before coronavirus, utilities was doing so well. I mean, that sector was so hot. It was so hot. See, I remember this. This was before coronavirus. It's pumping up, huge run. See, it was just kind of modest, and all of a sudden, it broke out. I remember it broke out from here, and it just soared. So even after seeing that, I'm like, okay, just because coronavirus hit doesn't mean that that's just over. I mean, whatever was going on, I know this is all the money they're being pumped, and I get it, but still, it's like whatever made them want to do this, I feel like I don't see coronavirus would just stop that. Although now it's looking pretty bad, because now it's just. I don't know, but it looks like it wants to pop back over here. Because this is a longer term moving average. When I notice this longer term is above the shorter one, then this can this is bearish, but this has a chance of recovering. Because when I've seen the shorter one over the longer one, the shorter one just pushes things down. I don't know. It's what I've noticed. But it's hard to even say, because I've noticed those things more so on smaller caps, on the daily or in the minute charts. But anyway, this is still bearish. I mean, but again, if I would love this to break this formation we're making here. If we could break this triangle wedge thing here and go down here. If we can break here $57 pretty much, I would love to be bearish in this sector. Absolutely. Put some alerts even before. So this is kind of good to look at. But I'd still look for a bearish trade here. CIG. It's cheap. CZZ, SBS. Yeah, all the ones that. I mean, this is fucked up. CMS. So CMS is the only one that's actually even worth looking at. But it's a really good chart, really bearish chart. Well, I would love to do a trade on here, but watch them have no options. Just so look at all this progress, though. Look at this, man. CMS Energy got fucked by this coronavirus. Oh fuck. Let's see. And look, it's a new low. This big white. Oh, they had earnings. This is good. They had earnings, right? They were bad. Big sell volume off this. This is a good entry, and it's breaking all this. I gotta enter this. This is a bearish trade I want to enter and target like here. Target 54. I think that's what's. Oh, I didn't have weeklies, but still, that's fine. Something like this, I don't even want weeklies. Look at these. Are these all illiquid too? Come on, man. Oh, at least the calls are. It's funny. It's like the direction you want to go. They're not illiquid. Like I want puts. Hell, a $55 put wouldn't actually be so bad to buy. And it hits 54, I'm $1. The thing is, even if it hits 54, I'll barely be in the money. That's not good. I'd rather have something more than. Yeah, I hate the widths of these strikes. They're $5 strikes. I already know I can't play this in my Robinhood account. The strikes are too much. Like, what would I do if I sold at 55? That's what I like to do. Is sold at 55, put, and buy the 660. I'm spending 220. Just if I did a bear call spread, how would I do that? Spending 220. Let me see how much I'm gonna make though. Yeah, it's a little over 1 to 1. It's not bad. It's pretty good. It's pretty good though. I might take this. Only the reason I might not take this from my account because I already have enough bearish trades in there. I don't want to put any more on. I got all in there, so I probably won't. This is why I don't even want to because I like having accounts. Like I like having different places to put different trades. It just helps me organize things, I guess. But this looks good though. I'm trying to think about how I'd play this. I might sleep on this one because this is a good setup. So T2 Biosystems is cheap at 54 cents. Check that one out. Yeah, I'm gonna check that one out. I'm just check out this bear call spread first, real quick. Yeah. I mean, I'm spending 300 to make 200. It's the same. You said it's the same, just multiplied by 10. It's pretty much either you're spending 30 to make 20, or 20 to make 30, or 35. It's kind of like that type of thing. It's like odds, probabilities. It's just the same. And it's still, I'm not gonna spend 300 to make 200. Hell no. Ew. Okay, so let's look at this T2 Biosystems and probably call it from there. This has been really fun. Let's see their stock or their TTOO. Nice. Market cap 54.62 million. Nice. We'll see their float. I think I've seen TTOO before I've seen these people before. Yeah, I'm familiar with them. I don't think I've traded them. I might have. Maybe I don't remember half the shit I trade. Because all these different companies. I mean, there's all these scammer companies, bullshit, whatnot. TTOO though. Yeah, I've definitely seen this thing pop up before. It's good though. Um, yeah, I wait to earnings. Personally, for some earnings, what's gonna happen? I know when I trade this, I don't already know what's gonna happen. It's gonna gap up, maybe to. I want it to be over $1 before I trade it, and then it'll be that's how I know. Because the thing is, buying and holding penny stocks. I've done it, of course. Just something I've never been super good at. Because I'm the type of person that'll buy this, hoping that it'll just pop up again, and then damn, it just like taps his 50 and just flushes down, and before you know it, I'm like, it's at 37 cents. It's just like, hey, Maritime Slave. Yeah, definitely watch this again, and just take the concepts I talk about, write them down, and then look them up. I think that's the best way. Take all the key terms, write them in a notebook, and then look them up on YouTube, and then watch people's videos about them. And then you'll stumble upon, because you'll watch a bunch of people, you'll find out how you'll like different teaching styles. You know what I mean? You're like, oh, I like how this guy teaches options versus this guy. Like me, when I first learned trading, I learned from different people, but now I just, I almost stretch it and refine, but I learned, like, Warrior Trading is my favorite trading educator. Ross from Warrior Trading. You guys probably seen him before. Warrior Trading. They have like a course. They teach options. They teach everything. Penny stocks or small cap stocks. I call them penny stocks. I call anything that's cheap penny stocks just because that's what everyone else does. I feel like if you say small cap stocks, no one knows what they are. That's why I don't. I say small cap stocks personally, but talking to the, I guess, normal people, I like to say penny stocks because everyone knows they are cheap stocks. But definitely subscribe. His channel's awesome. Ad free channel too, because it's all within his business, so he doesn't have ads in his channel like that. But yeah, it teaches you how to trade. Just definitely do this regularly because I want to get familiar as I am with gematria. Add more rows. I'll definitely do this. Maybe it's just something I can just do at night, because at night it's just like nothing's in the way. Maybe not every night, but since I do want to keep you guys updated with my portfolio and my progress, so it'll be often. And it's good because it's at night, because I don't have to worry about. I feel like if it's like all the time during the day, then it's like, oh, why don't you teach about gematria, which I want to. You know what I mean? If it's at night, it kind of implies, okay, I'm putting the non-gematria stuff at the end of the day. Everyone's sleeping. Who what I mean? If you care about this, you're gonna stay up and watch it. If you don't, you can just go to sleep. So it's kind of cool that I'm doing this at night. So yeah, I'll probably do this at night more often. So yeah, definitely check this guy out, Warrior Trading. I go to his chat room every day and like trade alongside him. It's a lot of fun. He's a really really cool guy. His playlists for beginners he has. I mean, you can just check out his channel, but it's really good. But he doesn't trade stuff like this. He doesn't trade anything under $1. Like what he would do is he'd wait for it to be above one, or even like me. He'll do this too. Like the wait for the break at one. Like this will be a good break at one. Cause see how this hit in high 99 cents. It couldn't break one this day, but it's just a matter of time. It just needs to hit up there again, and that's why I'll set an alert for 90 cents, 80, 90 cents, 80 at front, 88.1, perfect. So this could be years from now. I don't care when, but whenever this gets up to his level again, then I'll be there, ready. I'll probably get some shares. I'll probably get a start of 100 shares at 90 cents. I'll add more at 95, and I'll sell when it breaks one. It'll maybe 1, 2, 3, or 101, 102. Maybe go to 105. I'll sell at 105, and then maybe get back in, or whatever done happens there. But yeah, the break at $1 is good. It might even go higher than that. But I haven't seen a good dollar break in a while. So I don't know. But it's a really good balance. I'm glad you agree, Moon. Yeah, it's a perfect balance. I'm glad you all enjoyed this. I figured you guys would. Because everyone asked about trading and what to do and how to do it, and I figured if I just showed regularly. So we already have the plan for tomorrow. I already put those trades on. We can go to my where is it? History. Here's queued. So we have these two. This XOK trade, call debit spread. See, this didn't work. As in, didn't get. So sometimes you don't get filled. It's fucking laggy. It's probably time for me to get off then. So this is a. Oh, what? This is a butterfly that never got filled. Oh yeah, it's been so good. 9, 10, 11 TEVA. I'll show you what I was doing on this one. But yeah, sometimes you don't get filled. That's okay though. That's what my plan. My plan's to put on a bunch of trades and get filled in some of them. I mean, as long as I get filled in some of them. I mean, it sucks for if it's dumb though, because I was like, look at this, 9, 10, 11. I mean, look at this range. See that 11? Like, I mean, it has to break through all this. I mean, it has to go through all this to get past 11. 9 is the 180 SMA. I mean, it's fucking perfect. It's such a good, but I'm so excited about it, but I just didn't get filled. And my plan was to put it on and take it off before earnings. So I don't know what to do. Maybe I'll revisit it tomorrow. But it's a more of a, I think it was a more of a illiquid stock in a sense. Not too illiquid, but it's harder to get filled, I guess. But that's kind of unfortunate because that's really really good. I really like where that's at. And then here's XOK. It's the technology sector ETF. Yeah, just see same. I'm doing the same thing. I'm just selling just add the money, call, and buying this one right by it. Thinking it's gonna go up. Let's see where's that today. 89. Why did I get the 86? Oh, I sold the 86 call. Oh, did I really do this? Let me see if I did this wrong. I mean, you didn't get filled yet. Thank God. Let's see. Yeah, I sold the 86 and a half call, and I bought the 86 call. It's a bull call spread. It was an in the money bull call spread. So pretty much you just need to hold above here for make money. I mean, it was just so perfect. I can't even get filled in this either. It literally just needs to do all this shit and just buy this, not go under this. That's literally how I set it up. And I would have made 25 bucks. It was almost guaranteed. But now I don't know how am I gonna get filled in that without making like I won't. But you say I didn't get filled. It's like if it's such a guaranteed trade, maybe if I spent maybe like 30 or 35 bucks, I never got filled. But I'm not gonna do that. That's why I probably didn't care. I'm not gonna do that. Sure, it's a good way to make 20, 15 bucks. But again, I think there's better ways to make that kind of money. Yeah, but this is good. I think it's gonna hold this area. You see how see it's converging. These are gonna converge and bend up, and then it goes up. I think technology might be the first sector to reach where it used to be. Might take some time, but that's what it's looking like. And that's why I have some traded. So because of that, again, I couldn't play this. Oh well, I just play some technology ones like I don't know. No, these are technology, but over time they will. Maybe PVG. What is this? I don't remember. See, I don't remember half the shit is. But I always plan them before I put them on. So I think that may be it. I guess I'm gonna wrap it up here. My plan for tomorrow, then, for these small caps too, is whatever's on the gap scanner. It's gonna be some new Y10 YTEN could continue tomorrow. So if you guys want to know a stock that could move tomorrow, it's this one pot because it moved today, so it's gonna continue tomorrow. But it could also just sell off. So I wouldn't just buy it. It could sell off. It could go. But these things will continue. Um, ARCT. This is one of the ones I saw too. It was one of the things, but I don't think I get the options on it. So yeah, Chegg, that was looking good. Who qualifies for Robinhood account? Anyone with this bullshit SSN? Zach's trade for not an American. Sure, you can see some people who you can learn this from. Sacha Baron Cohen. This is 6. Can you guys? Okay, yeah, that's it. That's God telling me to get up. I mean, I added some trades. We went through everything. I mean, I'll show you some of the rest. Just be at 45, man. If not, it's in here. I think it's a good trade. I don't feel bad about it. If it works, I make like a couple $100. I think it was worth it to me. I could not do it. This is the one I did today. Darling Ingredients. So, again, descending resistances, maybe not here, but this is a double top. But more importantly, it's just getting into the 50. So I think, okay, I was like, okay, this is gonna pull back and consolidate until hopefully the 15th. I guess if I could put these on, if I could put these on the first, I would. But some of these don't have weeklies, and I was gonna take this off before earnings too. If I had made some money off it. But see, I spent 26 to make $74, 74, and this means that right now when it's at 100, it means that like it's out the money. So right now it's just worth like I haven't made anything right now. Pretty much I've lost about $26 on this. That's what it means. But again, you can't give up hope until expiration. You know, because even if I hit my target, I can't make my money until expiration anyway. I can't make all my money until then anyway. So don't worry about it. That's why this is good. If you have a day job, if shit you're doing, these options traders great. You position size for max loss, and you hold till expiration, or at least close enough to expiration, and you literally do not have to worry about them. Because if the stock tanked, right, or went all the way up, it does not affect you. You've capped your losses, so it does not matter. What you should be more concerned about is reallocating that capital to something that can work for you. So hopefully this works, because I would love that to work. These ones that I spent 25 to make 100 or 25 to make 75 or something. Those. But I think I've learned like Best Buy was such a good one today. I couldn't get filled. I swear, if I was on another platform than Robinhood, I would have. But look at this, Best Buy, brick and mortar store, shit. No one's going there for fucking coronavirus right now. So I'm like, okay, then why would it want to squeeze on this SMA? Maybe to trap people, but I don't think it's gonna hold. Let me see this overhead here, this resistance. I'm like, this is probably gonna pull back and want to try this again. It's plenty of time to the first. It was gonna be to the first. I was gonna, risk like $33 to make 70 something, 70 whatever 9 or something. So I can't do the math in my head. 77, but I just didn't get filled, and now I just can't get back to there. It would have to push up tomorrow for me to get filled there again. I have to re-put the trade on. But this is what I'm trying to say. These squeezes, you saw how see right here, this push up right here. This is what I'm trying to play on DAR. It squeezes up to the 50. And it will eventually break, but it has to pull back first. It doesn't have to. It never has to do anything, right? But it usually does. So that's what I'm playing off of. I want this to pull back from here. I mean, it's too late now. I'm not in this. I even tried to get filled at 50 cents, like a 50-50 1-to-1 on my other account. I couldn't even get that. So that's why I'm not really worried about it. But that would have been nice. So that's really that. So yeah, there's more trades to come. I'll probably do a recap. I don't know when I'm streaming this next. It might be tomorrow, it might be soon. Oh, thanks, David. I'm glad you liked the show, man. But yes, people are leaving. It's late. I don't want to. You guys, I'm procrastinating, but I'm like, I gotta get up. Like, I gotta get ready for bed. But this PVG $9 call, I'm excited about this. I just hate how the market cap's so high, man. Well, that's things. I need to be patient. I know that soon there will be some really good setups. I feel like if I just keep taking some, again, I don't mind re-upping my account. The whole point is if I lose $300 max, $300, I'll just put more in. Like it doesn't bother me because again, it'll take me a while to lose that. I'm risking so small per trade, and why am I going to re-up? Because if you don't re-up, I can't. I'm just gonna blow up my account. Like I can't risk. I can justify risking $25 because that is 2% of like $24 is 2% of 1,200. So it just makes sense when I'm just 25. To make 25, it makes so much sense with my account size. So once I'm lower by a few $100, I just can't do that anymore. So I'd rather just put more money in and then try again instead of just keep losing or something. So that's why I'm not worried about any of this. I'm having fun. We're all learning here. What's up, Superman? Oh, thanks, Fernando. Yeah, take care. You too, man. Superman 333. You just dropped in here. We're about to leave. If you don't know Gematria though, that's what this channel is, Gematria, and hope you learn. Bank of America. So I'll show you Bank of America. I have a butterfly spread in them. It might not work. None of these might work, but they have their flag, Banker 33. Yeah, I will get some sleep. I just want to give Superman 333 one lesson because he just joined. Banker equals 33 in Gematria. K is the 11th letter. So you don't you don't need to reduce it because it's the master number, right? So look at their logo. It's 311s, 33. 11's the master number. And oh yeah, Superman. I mean, man, there's so I really I know you do. It's just sometimes when people jump into the stream, someone's like, oh, they're a new person or not, and sometimes the names. I know your name seems familiar too. Now I'm thinking about it, man. I need to go to sleep, but no hard feelings, man. I don't even know. You know how it goes. I'm just trying to introduce this to anyone who wants to see. But here's Bitcoin. I don't do Bitcoin, by the way. I just don't follow it. Like I've traded it before, and it's the same. It's a similar way. I mean, with a daily chart, I've traded Bitcoin before using moving averages and all type of shit. Similar thing. It's just price action. Oh, no problem, man. Absolutely. See, I'm about to be done. I'm just trying to think of the next thing. Oh, so one thing you can look at, I do this. You can look at the E-minis right now. This is the S&P 500 or the futures trading right now, so you can see what's going on. See, looks like it wants to sell off. Looks like it wants to sell off and pull back to here, and that's good. Once it pulls back, then I can load up some more credit spreads on some other companies because they will pull back too. So it's good. It's a good day. I mean, who knows? It's what it looks like, but that's too early to tell. It could easily open up. See, so it looks like it could sell off back down here. So these are the E-mini futures, but this doesn't mean anything. I mean, we could wake up tomorrow and it's up here. You know what I mean? And that's what I really think this wants to test this SMA first before it wants to move back down. And we're so close to it. I mean, why not? If we don't, great. I don't want it to. I want shit to roll over, man. Because again, if it's trending, if it's rolling over and trending down, I could play that. I could play an easy trend. It's easy. When it's sideways, it's kind of hard without just putting a bunch of sideways trades on. All right, so that's enough of that. How likely is a crash? Just wondering, how likely is a crash? Very likely. Kind of how I was explaining here. Like, you see back in 2009 what happened. How there was a dip, you know what I mean? See this bear? See, we sell off, we recover, and we hit this SMA and we go even lower, right? That's what I'm thinking. That's what I think we should test this before going lower. So we already had our crash thing, right? But it's likely to go lower. See how it tries to recover here again. It even reclaims these moving averages. These are bear traps. Or not bear traps, bull traps. It's trapping all the bulls. Everyone bullish wanted to take the stock higher. And they go, it's closing above this long-term moving average. Let's start all the investors. They start buying, and then they just get fucked. And it goes even lower. See what I'm saying? So you could have said this was a crash back here, but then it goes lower. So this is a possibility for where now. Sure, you can say things need to happen. Guys, they can make up all sorts of propaganda. So going back here, then you see how we crash. This was the crash, right? But recover, roll lower. You see, you can just roll lower. Like, because we saw that in 2009, man, it's possible. So it's very likely. It's bad, but also my bullish sentiment is that might not happen, and we can literally what we're gonna do. We're gonna consolidate around here, and then these are all gonna bend up, and we're gonna come retest this SMA, reject a bit, maybe retest it again, and then maybe the second or third retest will finally get it. And then that's all the propaganda. Oh, the market still is reclaiming the 200 SMA. You'll literally hear the propaganda probably say that. Oh, the 200 SMA, reclaim all this shit. I don't know. And that might even be where they fake people out there, But they'll start talking about it, and all of a sudden, before you know it, the market's literally back at all-time highs. They're like, oh, the market's back at all-time highs? How? It's possible. It's fucking possible. I mean, it might be unlikely, but it's possible they can just grind for a couple more months, reclaim this, and then go back like nothing happened. And then phase 2 coronavirus hits, and they do it again, and it's even more violent. I mean, but that sounds kind of more unlikely. I think it's a whole lot of movement. I think which is more likely of what happened in the past. This is to try to recover, just to roll over some more and make even lower lows, or roll over some more and not even get halfway and then recover. I mean, I think those are the three scenarios: roll over here, sell off higher, start recovering to continue to make higher highs, or sell off decent amount, but it's not like, and it's not even a retest or anything. It's just like it sells off, maybe just a scare, maybe to fake people out, then recovers. I'm not sure what else it would do apart from that. So we'll see. I mean, it looks like right now they're stealing all the money because again, if they're faking out bulls, it's the perfect time. People are so bullish now. They're looks like they're fucking with them. So we'll follow up on this though. I think after this week and next week, we need to get to May 15th. That's when we really see. It's these options expirations, I think, around them. Maybe not though, because these are some pretty good expirations. I don't know. But yeah, this is ideally what you want. I mean, this is again perfect. This is too perfect, man. Just chill action all the way through. That's how you make all the easy money. This is a little bit more tricky. So, good video, good stream. I'm gonna close it down. We'll be back soon. Just to see where things are off right now. We're leaving off showing 1, 2, 3, 4, 5, 6, 7, 8 trades in the portfolio. It says 718, but it's more like 900 something. When the market, I might make a video when the market opens tomorrow, just so you can see it. Maybe we'll see, because this doesn't mean anything. And then where's the fuck's my? Jesus Christ! I'm so sick of this shit not loading. Well, you get it. You see it. I want to see my pending trades. That's what I'm trying to show. Yeah, you too, Moon. Have a great night. It's gonna be fun. Next stream's gonna be great. Very welcome. Glad you were here. And then Mike Harrison, May 1st, 666, day 122, 121, not a leap year. Or not a leap year. Leaving 244. Weishop 122, 121. 121 minutes, 2 hours in 1 day, like 201. May 1st this year, Illuminati. What happens May 1st? So we were looking at it earlier, May 1st to 666. I mean, we see some market sell-offs potentially May 1st, because May 1st right here, and I see this one to at least get kind of encroach this green line, this this SMA, and then just sell off from here, or it gets here, it even tries to sell off here, and it hits and it just goes lower, or this is the day where things might change. This May 1st. And we're pretty close. So that's what I'm thinking. It's a market event that day. But yeah, this VIP should place. So these should place. This XLK, I'm still gonna keep that on. I still like that. So I'll tweak these tomorrow. Make sure they get placed. I hope they do. You see my 1,200 deposit from the cabal, from the you-know-who's. Give us our money back and their stupid fucking agenda. The Catholic Church. I'm playing with their bullshit in their market, and we're gonna have more fun looking at this later. So again, I know someone new might think I'm down 7. You see the 1,200, you see the 700. Again, I still need the 200 from Robinhood, because they give you money in parts and things haven't settled. Because again, once I'm down $300, I'm not gonna keep trading in this unless I re-up. Don't worry. So you won't ever see me at 700 without saying. If I did, I'll tell you. I'll let you know. I'm not gonna hide any losses. But if I get to 700, I'd re-up with more cash. So we keep doing this. All right. So take care. Peace out. Oh yeah, for sure. Glad you're up late too. I'm glad you're here too, man. Well, you take care of the real Bontonian. Catch you in the next one. See y'all later. Bye.